We are deeply grateful to the speech for advancing our understanding of crypto financing. 现在我们衷心感谢各位观众的耐心聆听，我们的嘉宾的不同的见解，让我们都有带来不同的启发。Ladies and gentlemen, that will be the morning session for the Forum of PayFi. Thank all the speakers again for your excellent speeches and the audience for your participation and patience. 各位观众，2025香港 Web3 嘉年华 PayFi 主题论坛上午场已经结束，再次谢谢各位精彩的分享和各位观众的耐心聆听。Besides, you can collect stamps by visiting the booths of the organizers, title sponsors, platinum sponsors, gold sponsors, primary, secondary, and tertiary exhibition sponsors. When you collect a certain number of stamps, you can claim a gift at the information desk. The number of gifts are limited. They will be provided on a first-come, first-served basis. 另外，在会看手册的赞助商 logo 页、主办方 title sponsor 及所有 co-organizer 白金、黄金、1级、2级和3级赞助商的 logo 下方均有一个该章处。活动期间集齐所有奖项的印章，即可前往咨询台领取对应礼品1份，每人每天限领1次，先到先得。Now we are going to take a lunch break. The afternoon session will begin at 2 p.m. Enjoy your lunch and I will see you very soon. 谢谢大家的参与，我们下午2点见。尊敬的各位来宾，下午好！欢迎各位来到由万象区块链实验室 HK Group 元币科技联合举办的2025香港 Web3 嘉年华之致富新纪元 PayFi 的金融诗篇主题论坛下午完结。我是今天的主持人罗佩琪。Ladies and gentlemen, good afternoon. Welcome back to the afternoon session of the Hong Kong Web3 Festival 2025 PayFi Sub-Forum hosted by 万象Blockchain Labs, HK Group LD Technologies. I'm Pinky, your MC for today. 在这里，我们很荣幸邀请到不同的专家为我们分享和研讨。接下来，我们先邀请我们第一位的嘉宾。Now, let's welcome Ms. Rita Niu, CEO LD of Technologies. Please come to stage. Her keynote speech is titled "The Future of Global Payments and Trade." Please give a warm welcome to Ms. Rita.
谢谢我看刚才主持人也是中英文双语啊，然后我觉得我还是讲中文，因为今天看到今天来的这个各位嘉宾主要是中国面孔啊。就我先介绍一下自己，我是 RD Technologies 这个元币科技集团的 CEO Rita。非常高兴今天下午在这里跟大家探讨 PayFi 的机遇、挑战和它的价值然后这个也非常感谢今天就是万象给我们这个机会一起合办这个 PayFi Summit。我们觉得就是今天大家都讲今天可能是可能的这个黑色星期一啊，但是大家都聚到这里的话，我想大家可能是也是对于这个技术，对于这个 tokenized money， 对于代币化货币、稳定币等等的，就是对于未来带来一丝希望的这样的一种期望带着这样的期望到这儿到这里来这个聚到一起所以我觉得就是那我就开始讲就是这个我的这个其实这个题目叫做就是稳定币 stablecoin 这个 the future of global payment and trade 就是全球支付和贸易的未来稳定币就是但是呢。我们这2天可能都讲所有的事情都不可能抛开这个正在发生的这个贸易战，就是 What about during a era of 这个 trade wars？ 就是在贸易战的时候，这个我们这个世界越来越进入到这个不稳定、不确定的这样的一个阶段，这样的一个时代，那稳定币在里面会扮演什么样的角色呢？那 这个可能我不知道在场的各位就是也有一些可能对于稳定币或者说是对于这个稳定币支付这个市场或者 Web3支付市场已经有一定的了解，所以就是根据大家不同对这个市场的不同的了解程度啊，可能这一块你们已经有一些可能已经有一些熟知，就是稳定币支付就是稳定币在全球支付的这个占比已经是非常大了。2024年的时候呢，这个稳定币的这个交易量已经远远的已经超过了 Visa、Mastercard 的支付量啊。然后同时呢，稳定币的交易量跟这个 digital asset 就跟数币资产的这个交易也是越来越脱钩的一个关系。就是那大家都知道，稳定币最初的产生可能更多是用于这个数币交易的一个风险资产进出的一个工具。但是呢，其实从这两个表大家就可以看到，实际上稳定币越来越多的在全球支付和贸易里面扮演越来越重要的角色。它这个支付的量的产生，它是什么呢？它不仅是一个怎么说一个这个量的大小啊，它实际上在代表着这个结构性的改变，就是全球支付市场的结构性的改变。那为什么呢？ Why？ 为什么会有这么大的发展呢？这么快的这个发展呢？可能大家只是看到一些公司啊，就是我们这个稳定币行业里面有些公司赚了很多钱，但实际上它在这个全球支付贸易里面扮演的角色越来越多。为什么有这些变化呢？其实我们看到是3点。第一点就是这个全球监管体系的越来越明确，就是这个 growing clarity in regulatory framework。实际上，在25个 jurisdiction 和国家已经有稳定币的这个监管方面的这个框架或者说是法案，这里面也包含了香港啊。香港就是我们的这个法案正在立法会的讨论当中啊，我们希望能够尽快看到这个稳定币的立法出台啊。所以这是一个原因。第二个原因呢，就是这个在发展中市场，就是我们的 emerging market 啊，越来越多的看到这个稳定币被大众所使用，它实际上不是一种它已经不是一个这个创新或者什么，它是一个非常必要的工具。对于这个 emerging market 的这个非洲啊、南美的这些兄弟姐妹们，这个稳定币可能是它的 lifeline 啊，不管是它用来储备资产，还是用来做全球的支付啊。这个里面呢也可以看到，就是说在一些国家里面 ，emerging market 的一些国家里面，稳定币的交易量已经占到 GDP 的高达4%以上啊，所以这是非常大的一个比例。那第3点呢，就是传统的这个金融和支付 player， 就 TradFi 和我们这个稳定币这个行业越来越融合到一起。其实大家也看到 PayPal 对吧，也发了一个 PYUSD， 它跟 Venmo 这个结合以后呢，它的这个交易量和这个 market cap 是增长了3倍以上。所以就 TradFi 和这个stablecoin 也在越来越这个界限越来越模糊。一会儿我会讲一下为什么这会越来越模糊啊。所以这是3点。所以这个是 lead to where？就是我们看到的，就是我们讲的 Payment 3.0， 就我们经常讲的，就是第3代支付。第3代支付的发生只是一个时间的问题，它一定会发生啊。我们在元币是坚信这一点一定会发生。所以这个支付的第3代是什么呢？第1代我说的是跨境支付啊，跨境支付的第1代就是完全的依赖于中间行和 SWIFT， 它是一个SWIFT 的报问体系加上中间行私有账本对账的这样的一个模式。那它就是资金流和信息流是分开的一种模式啊，这是 Payment 1.0， 就是第1代跨境支付。这就是为什么到今天我们如果还是依赖这样的支付体系的话，为什么它这么慢？为什么它这么贵？为什么它这么不透明？就是这个原因，它的信息流和资金流是分开的。那第二代支付就是我们看到的各种互联网金融公司。那它的做法是什么呢？它就是各个地方全球可能有牌照啊，然后呢有资金池，所以这样的话呢，它可以利用自己的资金池去做这个，不管是对敲还是做这个资金的这个advance。它可以达到一个更快的结算效率，但是这个的问题是什么呢？就是 capital intensive， 对于每一家公司去做这件事情都是一件非常贵的事情。第二就是它是 walled garden， 就是每一个家公司有自己的一个小花园啊，它是互不相通的，所以它的流动性也是互不相通的。 那第三代是什么？第三代支付就是基于代币化货币和稳定币的第三代支付。首先就是我们经常讲，稳定币实际上是实现了比特币最早的愿景，就是什么呢？比特币白皮书讲的是一个 peer-to-peer global payment system， 对不对？一个全球的支付体系。所以它的这个区块链的设计，就是为了这个公共账本的设计，实际上就是为了支付设计的。所以稳定币到今天啊，稳定币应该说是在实现这个最初的愿景、最初的初心，就是做一个24×7全球无国界的一个全球支付体系。所以它的信息流和资金流是合一的然后它的这个流动性也是全球化的、多样化的因为由于数币市场和传统市场的这个合一，它的这个liquidity 是 global and diversified 的，所以这是我们看到的，一定会有这个 payment 3.0。好，那 RD 在做什么 ？RD 就是我们在做的，就是在这样一个世界里面，就是说从我们法币世界到这个未来的稳定币为基础的 payment 3.0，它有很长一段时间里面会是法币和稳定币是并行的。那如果它并行，就一定要保证它之间的无缝连接。所以我们在传统支付里面经常讲到5大功能，就是收、付、存、汇还有管。对吧？所以现在我们其实在这个时代，就是法币和稳定币并行的时代，其实我们要做的就是在法币和稳定币的2个层面都有收、付、存、汇、管的这5大功能，并且这2个层面可以无缝的连接。所以这就是我们 RD 在 build 的一个核心系统。同时呢，在这个基础之上，就是大家看到下面，在这个基础之上，它会生发出来一个全球的支付体系。这个支付体系不是 RD 一家能建成的，这个支付体系就好像未来我们大家经常现在可能也讲到，将来会不会有稳定币这个行业的 Visa 呢？就是把大家连接到一起的这样一个 network， 其实它已经在形成。就是什么呢？这里面我们会看到各种角色，从发行方到这个我们叫做 facilitator， 叫 distributor 分销商，叫这个促进方，或者说是再到用户和这个托管账户。就这里面其实是各方。我们首先是认为，首先是会有各种各样的稳定币，越来越多的稳定币产生，而且越来越多合规的稳定币产生。同时呢，也会有越来越多的 acceptance partners， 就是这个收单方也会越来越多。收单方是谁？收单方就是手里有场景的这些公司 ，PSP 也好 ，liquidity provider 也好 ，OTC 也好，这些都会成为收单方。那越来越多的发行方、收单方中间的网络越来越丰富以后，它是不是就会形成一个网络？所以我们看到的就是说，未来的这个就全球支付里面会越来越多的被稳定币所替代这里面这个原因就不说了，这左上角大家讲的就是几分钟到账然后那个 total transparency 透明度，你走中间行的话，你不知道中间到底多少个中间行在中间，你不知道什么时候你能到账这个是 total transparency， 因为它在区块链上面。还有一个就是最重要的一点就是 Payment 3.0 跟 Payment 2.0的区别就是它是 total democratization of liquidity， 就是这个流动性不是我之前讲的就是大家的小花园了，这个流动性是所有人可以到各种场景 DeFi、SEX、DEX 去找这个流动性，去换你的这个稳定币和法币也好，稳定币和别的稳定币的这个转换，所以它的 liquidity 是 democratized 的，是整个开放的。所以为什么就是 Payment 3.0 是未来，因为它的优越性就在这些地方。OK， 好，那我们讲一下，回到香港，为什么我们在香港讲这个事情？香港其实是做这个事情最好的地方，为什么？因为香港靠近我们全球最大的出口市场。对不对？也是这个区域，亚洲这个区域，香港一直以来都是全球支付中心和金融中心这个3点第一点就是首先就是这个区域的 regional settlement hub， 第二个就是非常大的这个资本市场和这个存款市场第三个就是这个非常完备的一个法律体系。那我经常有人问我你们公司的这个或者在香港做稳定币，你们的这个 total addressable market 是什么？就是你的这个中文叫什么？你的可 target 市场是多大？我就经常跟他说，就是这个数字。2024年香港的 B2B 支付总量是12万亿，1.2个 trillion， 这就是我们的 total addressable market 而且这个量正在非常积极的主动的移动到稳定币，所以其实我们不需要做什么推动。刚才讲了，从 emerging market， 从这个所有这些地方要 access 这个 financial services 的这个 demand side 这个需求端在推动这些发展，所以这个1.2个 trillion 其实已经在 已经在非常非常多的转换到稳定币。OK， 好，那刚才讲的所有这些东西，怎么跟我们现在正在经历的贸易战啊，或者是全球贸易去连接起来呢？实际上就是，我觉得这里面所有的一个很重要的一个推动作用，就是中国在过去的应该说是几十年，或者说是很多年吧，就是它的出口已经越来越多的这个到这个 emerging market 红色这条线啊，就是在中国出口里面，这个 emerging market 中国企业出口和走出去就是出海，越来越多的目的地是 emerging market。这个其实也是一定程度上推动了稳定币在全球支付当中的使用，因为在非洲、在南美这些地方，它的币种不稳定，法币不稳定，并且传统金融体系的失败啊，应该说是传统金融体系的失败，这些国家的人得不到好的金融服务，所以它就越来越多的转向稳定币。所以一定程度上，这个也推动了全球支付里面这个稳定币占比越来越高的一个原因啊。同时呢，在这个区域，我想可能在香港，在这些区域谈过就是出口商、贸易商的一些这个同仁们可能都知道啊，这个出口商应该说是大量的都在使用稳定币去接受海外的这个支付啊。这个因为它的买方那边只有稳定币，所以好。我们应该，我觉得就说回到这个就是全球贸易里面，就是我们在香港啊，就是我们应该推动什么？我觉得在现在这个全球的这个局势下面，其实我们以离岸人民币作为这个挂钩的一个稳定币，将会是一个非常有价值的一个工具啊。这个其实在最近的一些这个包括两会啊，这个香港也有人大代表去提出来过这个想法，就是在港发行离岸人民币的这个稳定币。为什么？就是说这里面有很多的好处，所有这些都是好处啊。第一点就是在这个我们这个全球贸易里面，这个如果是人民币标价的产品，这个贸易如果是用 CNH 稳定币收款的话，它不仅把效率提高，成本降低，因为本来就是从 emerging market 或者一带一路这些地方过来的钱，你走传统金融体系就是非常难、非常快、非常慢、非常贵啊。所以这个里面，如果它可以用人民币的离岸人民币的这个稳定币，它用起来，它可以就是脱离这个双轨制汇率这个风险啊。所以这是一个。第二个呢，就是在全球的这个在人民币国际化的过程当中啊，其实一直以来人民币国际化都有个问题，就是流动性啊。那实际上在刚才讲了，就是稳定币它是一个就是democratized liquidity， 就是它是像更开放的一个流动性市场。所以在这个过程呢，在这样的这个前提下面呢，我们实际上是给这个人民币国际化的这种流动性提供了另外一种渠道。然后同时呢，就是我们不知道这个世界会走向何方啊，但是我觉得这也是一个很好的一个 contingency channel for global settlement for this region， 就是在这个领域，我觉得会成为一个很好的一个 contingency channel。然后同时呢，还有什么呢？还有就是香港本身就是这个离岸人民币的一个重要的结算中心，同时也是离岸人民币存款最近我们是看到离岸人民币在香港的存款这个又达到新高啊，所以这个香港本身就是一个离岸人民币的核心的一个 hub。然后最后呢，就是将来我想如果有这种，比如说这个 CBDC就是这个不管是这个人民币这个CNY 或者是Hong Kong Dollar， 实际上它也可以形成一种这种 interoperability， 就是稳定币和央行数字货币它并不是一个互斥的两个东西啊，所以我们觉得它是可以就是互换或者是共存的，所以我们觉得这几点应该说是在港发行离岸人民币稳定币的一个非常重要的一些优势。这也是我们非常希望看到的，在香港可以发展的一块真正改变现状的一个有意义的一个工具，OK， 所以最后我们畅想一下，因为我们讲 PayFi payment 加上 Fi 就是我刚刚只讲了就是支付，就是 Web3 支付，但是 Fi 是什么呢？就是由支付所生出来的金融需求所以这里面就是我们讲的就是说，我还是回到刚刚讲，就是稳定币实际上在完成就是区块链或者 crypto 的初心，就是 bank the unbanked，OK， 普惠金融，同时呢，创建全球的一个 P2B 无国界的一个全球支付体系。所以这里面呢，基于这个我们的 Pay 和 Fi 它会怎么样呢？就是我们畅想一个未来的这个贸易以区块链为基础的全球贸易啊。这边是过去啊，我们的所有的 paper based 的 letter of credit 信用证啊，这些提单，所有这些东西是 paper based。然后呢，支付要用中间行，要用这个传统的已经存在了几十年的报文体系。然后呢，同时呢，这个所有这些东西都是中小企业很难 access 的啊。那我们右边就是未来的 vision， 基于我们这个稳定币或者说代币化货币为基础的一个全球支付体系，同时在上面生出来的是 tokenized LLC tokenized bill of lading 啊，我们代币化，我们把这个国际贸易当中的这些文件啊，这些重要的信用文件啊，比如说提单也好，还是信用证也好，可以把它代币化，然后在此基础之上，加快这个全球贸易 trade finance 的这个效率和可延展性以及可 access 性、可获得性，就是对于这个我们全球的各种大中小企业的一种普惠金融。那我想这个是未来全球贸易的一个未来。如果是我们想想啊，就是为什么我们在一个国家里面可以就是像在淘宝上面买东西这么方便啊，就是我支付也是非常快的，然后也中间有支付宝在中间做 escrow account， 对不对？但在全球贸易里面为什么就是这么难呢？它如果在这个就是代币化的基础之上，它是不是可以改变现在的现状呢？那这里面就是以稳定币为基础的支付，它是一个基础。由支付我们会延伸到金融，那这个就是未来。所以就是我们今天讲的 Pay 加 Fi，PayFi 就是这样的一个我们大家都希望在这儿一起实现的一个愿景啊。所以这个。谢谢大家啊！今天的这个演讲到此为止，我主要是给大家开个头。接下来我们还有4个 panel 啊，都是这个行业里面各个这个 sector 的这个专家啊，希望大家那个 enjoy 下午的内容啊。然后这个非常感谢大家今天下午一定要听完我们4个 panel，OK？ 然后同时呢，希望大家来到我们的展台，就在C03来跟我们的团队聊一聊。谢谢大家。
谢谢 Rita 你的精彩分享，我们一定会继续的。谢谢 ，Thank you Rita, thank you for sharing your expertise。我们也衷心感谢我们今天所有的嘉宾的分享，你们的独特的见解都让我们有不同的启发。At this time, I would like to invite our panelists to join me as we exploring the following topic: PayFi, balancing innovation and regulation。接下来我们会进行圆桌讨论，主题是 Web3 支付金融创新与监管的平衡。我们邀请我们的嘉宾到台上。May we invite Mr. Edwin Chen, Global Head of OTC Gates.io, Mr. Bora, Director Digital Assets and Currencies at HSBC, Mr. David Shi, General Manager of Business Banking and Lending at ZA Bank.Mr. Alvin Kwok, co-founder and CEO at One Infinity, and Mr. Li Liang, CEO of HK OTC。掌声有请5位嘉宾。
Hello， 谢谢各位，下午好 ，Good afternoon, guys. My name is Edwin. I'm the head of OTC at Gate.io. Very pleasure to be here, talking about PayFi, and thanks for, coming to to join us with this PayFi discussion.So today, together with the great panelists, we'll be talking about, what are the trends, what are the challenges that we see in this sector, and also, any exciting projects or any firms that we see in this area. So, to kickstart this, perhaps, Bura, do you want to have a quick introduction about yourself?
Yes, sure. Hello, my name is Bura. I am with the Digital Assets and Currencies team in HSBC.
Cool.Hi,
this is Devin from CA. I'm overseeing the general business banking, and actually CA is more, like Web3 friendly bank, so we actually support a lot of the ecosystem player in the Web3.
Hi, this is Alvin Kwok. I'm the co-founder and CEO of One Degree, and we have a One Infinity brand that is doing the cybersecurity and insurance for blockchain.
Hi, good afternoon. My name is Li Liang.I'm the CEO for HK OTC. We are a liquidity provider in the OTC space.
Good stuff, good stuff. So, thanks for joining us. And, to kickstart this, perhaps the first question to Bura and Dathan. You guys are running the fintech arm in the banking. And as we see in the PayFi sector, everyone wants to have smart, quick transfer in the payments area. But a lot of times what we see is that regulatory constraint is the biggest hurdle and obstacles, to get the blessing. So, what are the tips, how you run the banking fintech arms, what are the insights and what are the challenges that you are seeing in this area? Bro?
Okay, I can start, sure. Yeah, so first of all, building and operating a Web3 environment in traditional finance comes with its own challenges, like you said.
Yeah.
And the governance policies, internal processes, and everything in TradFi are culmination of years of legacy. And when you are building a digital asset product, it's not a straight path. There are obstacles, etc., coming up, and there will be questions that have never been asked before. And answering these questions would take time. You may even need to change the policies, challenge them. It can be an option. And at the same time, when you are building first-in-class product, there is no example that you can take as a base in the world. You will have to invent things. So that's why my suggestion would be having legal and compliance streams starting at the early stages of product development from day one. This would be very important to navigate this kind of complexities. And apart from that, our priority is to address real customer pain points in innovation, through innovation. So, and when we look at the digital assets and Web3 perspective, rather than acting in innovation theater and using buzzwords like blockchain or DLT, etc., we talk to our customers, we look into our customer research, identify the insights, underserved needs, and pain points in the market. Only if we can leverage the Web3 technologies and address these pain points, then we move into the product development. That's overall how we approach.
Right. So legal and compliance, and also on day one, and also on the engaging with clients, for that. Devin?
I would say as from CA, CA is actually another bank just like HSBC. So we are still governed by the regulators, same standard. And in this regime, and when we talk about how we want to do innovation, of course, besides, legal and compliance, and then from the wants from the customers, and also the things is what that actual product it is. So when we talk about payment, like just what Rita mentioned, payment 1.0, 2.0, 3.0, this kind of stuff. And maybe right now for CA, we are still more on 1.0 and 2.0, I would say. Of course, we are still riding on the traditional rail. That means with correspondent banking, we know how bad it is. We know the pain point it is. There's also from our customers. And at the same time, we connect to some Pay 2.01. So that means some fintech, we also work with them. But at the same time, the pain point is still there. So right now, we are also in a very serious discussion on see how the banks can actually go to the stablecoin regime. But right now, I do think in order for Hong Kong as a bank to step into the stablecoin, for the customers to have some real usage, it somehow depends on the regulations. Because we know right now today, the stablecoin regime, the Stablecoin Act is still under the discussion and then going to be the LACO in the coming months. So we expect that after it is legalized, it is a framework is fixed. And more importantly, we know which stablecoin the banks can actually connect with. Because right now we know a lot of the stablecoin is around the world. Some are regulated, some are fiat backed, a lot of different kind of stablecoin. But this is more about how the regulators acknowledge the bank can use it.
Yeah, good point. You mentioned about the regulations and compliance pain point. Maybe a questions to Alvin and Liang about, what do you see, what are the key compliance, hurdles or challenges that you see when launching a new products or services in the PayFi area?
Well, I think first of all, financial services is all about trust, right?
Yeah.
And security. So back in the time when it was in banking days, for example, this deposit protection scheme. In fact, the idea of deposit protection scheme won a Nobel Prize back in 2022.
Yep.
That was 4 years ago, because that really stabilized the system, avoid bank run and all that, and we just experienced it almost firsthand just a few weeks ago with the Bybit incident, right?
Yeah.
So there was a $1.45 billion hack. I mean, imagine if the amount is not returned to the customer straight away. Pretty much we would have another bank run in the blockchain industry. Now, when it comes to, so we have been in the last few years doing a lot of stuff with the custodians, exchanges, and basically securing the cold wallet and hot wallet assets. Now, when it comes to stablecoin, however, the custody at times is not at the stablecoin issuer, right? So the issue is less about the custodian side. However, there's still a number of different areas that is extremely important. For example, Tether, USDT, has a treasury hack back in some 6-7 years ago.
Okay.
Okay. So, and then, you know, there was at the time it was a 30 million hack. But now, I mean, if the amount is much bigger, then is it going to lead to a depacking of the stable coin, right? That is an extremely, extremely important matter. Now, Circle, also, the USDC, also had a couple of different social media hacks previously. So again, those become extremely important issues that we're talking about. Now, when it comes to a social media hack, like, you know, if someone somehow click on the link of the USDC Circle CEO, for example, and then got the money transmitted using a fake account. So who is going to be responsible for that? Right? So there's a lot of those. Well, frankly speaking, this is not something that is completely new. Well, when it comes to the banks, for example, there are a lot of different fake URL address, same thing, right? But I think the hackers are basically moving the kind of the battlefield into this area. So there's just a lot of risk areas that we have to think about and see how we can offer the right type of protection in order for the innovation to thrive.
That's right.
Right, and also like PayFi is like global business. So when you do business on global scale, you have to deal with like regulators from different locations. HKOTC, we are licensed on the MAS-DPT license. We have a secured license from Dubai Vara, and also like we have a license exchange in Japan. So in order to build a trust with the regulator, usually when you start to launch new products, we usually start from like the simple stuff like on-off ramp, plain vanilla spot transactions, and also like another important point is that we have to work with like established big banks, international banks, regional banks to offer such fiat rails, right? Another thing to add on, Alvin just now pointed out, is the asset safety. So how you can ensure the assets being placed under your platform is safe and sound, that is the paramount question to all the players in this market.
Right. You mentioned about the Singapore, Dubai, all the licensing. I'll come back to that front. That's a very good point that you pointed out. I wanted to navigate a bit more what is the comparison. But before that, a question to Burra about earlier you talked about the legal and compliance. I'm sure HSBC has already been engaging, lobbying with different regulators. Any tips or insights how for projects that run PayFi business? How are they going to liaise or start engaging with the regulator on day one, as you said? Any things, additional stuff to share?
Sure. Actually, I can share overall how we approach. First of all, first of all, we are closely watching the industry locally and globally, supporting the regulatory developments globally, and participating in related regulatory consultations. We are joining the forums. We are joining the roundtables. And I can give examples from Hong Kong. In Hong Kong, we are participating in Project Enbridge, Project Ensemble, and EHKD+. Project Enbridge focuses on multi-CBDC cross-border arrangements. Project Ensemble explores financial market infrastructure for interbank settlements on digital money through wholesale CBDC. And EHKD+ is the second phase of retail CBDC pilot. So we are also part of Project Ensemble architecture community. We shared our proposal on the technical requirements on cross-bank and cross-chain interoperability for HKMA to build their own interoperability layer. Project Ensemble also consists of experimentation on tokenized deposit use cases from HSBC. And at the same time, we are in the EHKD Plus programmability working group exploring token standards and infrastructure requirements with the other participants. So overall, I think being engaged in the regulatory pilots, consultations, and the dialogue is how we approach.
Very interesting about all the projects that you have. What about Devin? On your side, any other projects or compliance? All that stuff?
To see like CA also participate in the EHK dollar sandboxing as well. And of course, right now we are more focusing on the coming stablecoin projects that actually the bank is working with those stablecoin sandboxers, so that we are actually knowing how the regulatory regimes will go. So that's why right now, of course, the bank's position is pretty easy. What we are doing is more on the treasury management, on handling, make sure the, the fiat is actually safely stored in the bank. This is something very basic. And of course, for the other stand, other phrases, we would think about how we actually can the banks connect to the ecosystem of the stablecoin issuers. Because different stablecoin issuers, different kind of ecosystem. Maybe just like Rita mentioned, they have some overseas payment is one of it. And for the other one, they may have some trading ecosystem. That means they can facilitate some trading about the tokens in those regulated exchanges as well. So that's why the bank is actually, diverting the attention on different focuses. So the bank is actually right now, we are offering the retail crypto trading. This for the retail side. And for the business banking side, we are actually heavily working with the stablecoin issuers to see what kind of the ecosystem they can actually bring to the customers. Because as I mentioned earlier, our customers, small to medium enterprises, they have a lot of the payment needs around the world. So the point is what that can actually, the stablecoin can bring some new customer experience to them. Right now, they have to see, they have to be T+2 in the worldwide. Maybe after the stablecoin, they can do it like 724 in the same day in a very low fee. That's something that what they are really concerned about. To be honest, they are not really concerned about whether it's stablecoin or not, whether it's on-chain or not. To be honest, that is somehow very technical for them because they are not some Web3 guys. But to them, they want a very safe and secure means to process their payment in a low fee. That's what they need.
Right. So I guess a lot of questions people will be asking, is CA Bank issuing any tokens to stablecoins, or you're partnering with a lot of stablecoins issuers?
I would say right now the bank has no plan to do their own issuance of the stablecoin, because actually if the bank is already having some deposits, if we want to go for tokenized, tokenization version, we may go tokenized deposit. So we may not need a stablecoin, but rather we would like to see how the banks can be the distributor for the stablecoin to facilitate different kind of the payment ecosystem. But that is still, as I mentioned before, it really depends on the regulatory stand. Because right now we know different kind of stablecoin have different kind of supporting and their strong ecosystem. But to the bank side right now, the first priority is more about the cross-border payment.
Okay, got you. What about Liang, from your side, Hashkey as a regulated crypto exchange, how do you see the PayFi? What are the challenges and compliance constraints?
Sure. I think for Hashkey, we're running business in different locations, so we are dealing with the regulators at different locations like Singapore, Hong Kong, and like Dubai and Japan. I would say each location, the regulators' attitude towards how to promote this ecosystem is very different. Taking Singapore, for example, if you do crypto, it is falling under the so-called DPT, Digital Payment Token, and it is regulated under Payment Service Act, the PSA Act. And if you're doing derivatives, then it's totally unregulated, right? In Hong Kong, if you're doing like exchange, that's on the SFC, stable coins on the MA, and if you are doing OTC, right now there's a debate. Currently, there's a debate between like SFC and customers about the licensing issuing. In Dubai, it is I would say like a bit flexible, more friendly. So we set up entity in Dubai last year, whereby it allow us to do both OTC and also exchange business there. Japan, again, is very different as well. Japan, if you want to do crypto, then you need to apply this crypto exchange license, but it entails you to do both OTC and exchange, right? So to summarize, I think it's not that easy to navigate through different regulator like regime. So from that front, I think we need to have like as Borja just now mentioned, early communication and frank communication with the regulators to let them have confidence in a way that how we're gonna carry out our own business operations.
Yeah, I can see. Running a global business that requires a lot of different licenses in different regulatory areas. Wanted to understand a little more to Alvin's, questions. What do you see on the PayFi area? Any exciting business or projects that you see in the market, or even you're launching any PayFi business? Could you share with the audience about that?
Well, I think payment is one thing that, well, obviously is there's a lot of, like for us, we have a regulated insurance company, so collecting of premium, payment of claims. I think that is something very straightforward. But also what I found is there's a lot of opportunity when it comes to tokenized investments, right? So, and that is something that can really do it on a real-time basis. Matching the liquidity.
Yeah,
okay. I think there's a lot of opportunities in that that could even be coded in a smart contract way. But right now on that, I think the challenge, quite frankly, is that when it comes to regulator, given FATF, I think in Hong Kong, regulation also fall under that, is that when it comes to tokenized asset at the moment, like the haircuts is 100%.
Oh, yeah.
Then, well, and if you have something that you still have the liability, but it cannot be recognized as assets, then this become a really, really important issue. So I think as we got into PayFi, stablecoin, tokenized, real asset, all these things are happening. I think it's extremely important to actually rethink about the entire regulation framework to really make these happen. I mean, if this happen, think about how much insurance assets are there in the world. That is a massive amount. It's one of the biggest asset class. Then you can unlock a lot of asset into these type of investment vehicles.
So is One Infinity working with this kind of RWA projects at the moment, or?
So this is something that we are, well, on the one hand, we are doing the protection.
Yeah.
On the other hand, like there are different guys that were in discussion that, hey, what about we put the premium to become a tokenized real asset, right? That is something that, like, so all what we want to do is to facilitate another massive asset class to be able to get into this Web3 era.
Got it. I wanted to ask, apart from Alvin, Nathan, any other exciting projects, in the PayFi areas? And again, I wanted to understand what are the pain points, over those innovative products.
Okay. As Alvin just mentioned, tokenized investment product is actually also an agenda the bank is thinking about. And of course, I do think this one, I would pass it to Barack. You got HSBC got a real good example for the industry to talk about how the tokenized or the investment product that can facilitate like new thingy, I would say. And for CA, we are more focusing on how exploring two things. One thing is, it's still within the PayFi regime is whether the bank can actually bank stable, right? Because today, the bank is actually holding all of the fiat. We are not holding any crypto. We are not having any wallet custody. But we know that from the client's need, they are holding some crypto. And they want regulated parties to do the custodian for them. So as the bank, we can actually provide an all-in-one service. That means they can put the fiat on our side and also at the same time put some stables in our side. So in this way, you can just treat the stable and another kind of currency for the FX. So they can actually easily to commit, like, for example, regular stable into the bank's regime, and then like to do some FX exchange to be some fiat and then fiat out, and vice versa, the same thing. And this one is really important, especially for the B2B business. What they are talking about is when they get some stables from the overseas parties like Latin and Africa, and within the bank's regime, they can just turn it into fiat 724 real-time, best rate in town, and then they can do the disbursement elsewhere. There's one thing that we are talking about. And the second thing, of course, as a bank major business, we think about lending. So lending, we see that right now we are doing more about the fiat base, about the collateralized base, but for the collateral, it's still in the traditional asset like properties, cash, or even though securities. But when we talk about the value of the asset, about the tokenized RWA, or we talk about its crypto asset, right now we see some like not very favorable treatment from the Basel. So that means we cannot easily to grant a loan out by sitting this asset in our side. And also we haven't even talked about the custody. Custody is also another very heavyweight investment to the bank's regime. So I do think in the coming way we will think about how the bank can do more bank stable agenda.
Yeah. Yeah, the custody regime is launching this year, targeting to launch this year, right, in Hong Kong. Anyone got insight about the regulations part?
Well, I think there is, I just run into some regulator early today. I think there's some announcement going on. I think the custody regime is going to happen this year.
Okay.
I think it's going to go through the Legislative Council, 3 readings of that. But seems like there are several things. One, I think today there's a good news that, like for example, when it comes to virtual asset staking, right? That is a big news that come out today, which I think is a very progressive move. I think that's one. 2, but ultimately I think the safety, security, and all that, I think is something that, well, they do say that it has to be majority of that go into cold wallet. Having said that, I think in the Aspire roadmap that SFC has come together, like now, like something that we've been lobbying for a long time. It used to be 2% hot wallet, but if it's 2% hot wallet, then you need to touch a cold wallet all the time.
Yeah.
Okay, and what it means by that is cold wallet is not safe anymore. So I was really glad that in that roadmap, it basically has make it a lot more flexible. Now, there's another thing that we have been working together with the industry leaders is how can we make it a lot safer by even having a archival wallet kind of product. Which, like when it comes to ETF, for example, like ETF usually is on a subscription basis. You actually don't need to touch it very often. And then you really can safeguard it in a substantially safer environment. Okay, and that is also going to bring down the cost of insurance, for example, and all that, and just make the entire industry a lot more viable and sustainable. So I think there's a lot of innovation going on. Another part of the innovation going on that we have been in discussion with regulator with regard to custodian stablecoin is also on a using AI to do the monitoring piece of it.
Okay.
In fact, I think last year we have detected one of the 3 top stablecoin in the world having an incident. Like people are really trying to knock on the door to crush in, and at the time we actually detected it. Okay. So we notify them. They changed the setting. It basically saved a hacking event. And there's something that I think is becoming extremely important when it comes to stablecoin because, like, you know, the volume of payment is so huge. Like if you have one major loophole into that, and that basically could cause a major incident. So I think this is something that I think is going to have a lot of innovations coming up with the Red SI as well.
Yeah, I'm sure no one wants to have another Bybit accident again. Yeah, good point on that. So I guess going back to the question earlier that I was raising, you know, you've mentioned, Liang, you mentioned Singapore, Dubai, all this different comparison on the regulations, you know. How do you see Hong Kong as one of the Web3, you know, hub? And also, how do PayFi business navigate across these kind of regulatory bodies?
Sure, definitely. I think like if you compare Hong Kong and Singapore, there are many ways have similarities, but of course, like Hong Kong is traditionally a capital markets hub, whereby you have a lot of liquidity. Actually, so much more than Singapore. But in terms of regulators, the plan coming to this industry, I think probably one advice is that different regulators can work together, and it will become more efficient to drive out different business directions. For example, OTC is one area whereby there are different players right now in this market. So how does the regulator to properly regulate, yet not killing this space? It's something I think can have some lesson learn from on Singapore side, because Singapore everything touches on crypto, it falls under the MAS, the PSA license. It's more streamlined. Yeah. So for that front, I think definitely Hong Kong can improve a bit on that front.
Yeah, you talk about Hong Kong and Singapore comparison. What about Alvin? Do you know any insight on UAE? How's the comparison between UAE and Hong Kong?
Well, UAE has 3,000 blockchain companies over there now, so it's crazy. I know there's 900 companies applying for licenses. There were 28 licensed. There's 12 in principle authorization. So I mean, it's a crazy, vibrant community there. I think there are a couple of lessons that we can learn from it. I think one is, as Leo say, is a streamlined regulator structure, right? So having one regulator that can go, that I think that reduces a lot of communication cost. I think that's something important. I think also another part that is very important is to really encourage and drive liquidity, which I think is something that Hong Kong has started to move towards that. I think in Aspire roadmap, I think the key word is clearly liquidity. And I think there's something that it is extremely important to really encourage the big guys. I think be it the crypto native big guys or the TradFi big guys to all come to Hong Kong. And I think when I was talking to for example, HKMA and other regulators, when they're thinking about this, they really want to have all the different use case, G20 currencies and all that, and really drive the liquidity to be here. And I think this is really when it comes to a trading hub, and that's what Hong Kong has been really good at, from being an entrepot to the stock exchange and all that. I think that is really the cornerstone for us to thrive.
Right, right. In fact, Gate.io is also investing a lot in the Middle East, just to learn a lot on the Vera licensing, applying for the license. So I think that's a trend, to be getting regulations in Dubai, and also to move some of the business to Hong Kong and, to follow the VATP licensing. Okay, and Burak, do you have any comments from HSBC about the regulations? We have been talking a lot about the regulations. What are the pain points? Any insight from HSBC about on the PayFi, launching the PayFi business? Is there any things that you want to talk?
Yeah, I think we talked about Singapore and UAE regulations, but maybe we can look at from more global perspective. And let me try to summarize for you what happened recently. Let's start with US. And in US, we have seen some executive orders. In one of the executive orders, we've seen a ban on CBDC work. However, at the same time, it's promoting stablecoins backed by USD. And it also consists of exploration of crypto or digital asset stockpile. This is US, right? If we try to summarize in the simplest terms. And then if we look at Europe, markets in crypto assets regulation was approved. In short, MiCA. And one of the most discussed aspects of MiCA was the new rules about stablecoins, such as ban on algorithmic stablecoins. And if you look at Hong Kong, if we come to Asia, I think Hong Kong is a great example. We now have 10 licensed virtual asset trading platforms in Hong Kong. We have a stablecoin sandbox in progress. We have significant work in digital money, as I mentioned, Project Enbridge, Project Ensemble, EHKD Plus, and we have spot crypto ETFs and futures crypto ETFs on Hong Kong Exchange right now. So when we, and Singapore and UAE, yeah, so we talked about this already. If we look at all of these developments globally, for sure these regulatory developments is driving more adoption of the technology. So we expect to see more financial institutions getting into digital asset space, particularly in digital money and tokenization.
That's great. That's great. So, we have been talking about a lot of stable coins. I've been seeing that stable coins and actually PayFi is very interconnected. And, to wrap up, you said what I've been hearing is more about the regulations. We have to be engaging the regulator, upfront and proactively. What's any final thoughts, to give every of you on for the audience for final thought? What's the tips or advice, the last tips or advice you wanted to share to the audience about the PayFi area? Do you want to start first?
Sure, of course. I think we can maybe wrap up like this. We've talked about balancing innovation and regulation. For innovation, how to achieve any innovation? There is no all-in-one formula for this. It's not very practical to get in a room, conduct a workshop for a few hours with a few people and get an outcome of innovation. It's very rare chances that you can achieve that. And it is very difficult to predict how the finance world would look like 5 years later from today. Everything is moving so fast. Regulation, technological developments, market developments, customer expectations, everything is moving so fast. So rather than that, maybe it's very important to establish a culture which can also adapt into any kind of potential market developments. And I think having an ecosystem where the fintech, TradFi, and regulators are crucial components, so it would be driving further innovation.
Cool. Devin?
I surely echo with just Barack say it's a very fast and dynamic environment. So as the bank, we see it is like PayFi is coming very, very soon. And to the corporation ourselves, I do see we have to enable ourselves to be more nimble and agile so that we have to tackle with the changes and then react swiftly. So that I do think the next battlefield for the FI we will talk about is more on the customer experience. Because I do think the infrastructure are there and everything about we talk about stable coin, we talk about those kind of tokenization. We do think that that's all our tools. And how the banks can actually just utilize those tools to share some new customer experience so that they can feel good about the bank in order to win the loyalty. That's the first thing.
Okay, Alvin?
Yeah, well, I actually want to get back to one thing that Bugra brought up on zooming out the bigger global regulatory landscape, like for example, MiCA. Well, MiCA was just effective literally 3 months ago. MiCA, I think there's one line that is extremely important when it comes to PayFi or other guys is any operation failure will fall under the responsibility of the platform itself. Okay, so you can no longer say good luck, bad luck to the users, and for that reason now, if you look at a number of different regulations, including Hong Kong, including Thailand, Japan, and different guys, a lot of them have this 2% regulatory capital requirement. Which, this when it comes to payment, when it comes to PayFi, it could be an astronomical amount of money that we're talking about. And I do know that a lot of people have complaints or different things about that, which I really can have empathy about it. So Hong Kong has brought it down to 1%. Still, it's not a small amount. So when we talk to different regulators about this, why everyone has put in this 2% or 1%, it's really for the sake of when it comes to, for example, 1 hacking activity, 2 lawsuits, right? And all those stuff, how are you going to be able to account for it? Okay. You simply cannot afford the scenario where the one-to-one the packing, it's gone. Okay, so I think this is something that we are working very hard with the regulator, with the industry participants, how we can use insurance as a way to actually bring down the capital requirement. Okay, so I think that's something that, well, in order for PayFi to go up substantially in adoption, I think this is something that also is important to bring up, and I'm hoping that this can really balance innovation and regulation and make it a thriving environment.
At HQ OTC, we serve institutional clients and also high net worth clients. What we have observed from the last, I think, 1.5 years is that the speed of adopting like stable coins as part of their normal business operations have grown exponentially, right? So when you see this and when you want to replace a portion of your like business BAUs using stable coins, that means you got to be careful and you got to be aware, like what kind of risk are you dealing with, right? So in crypto space, you have counterparty risk, you have a lot of like money laundering and other kind of involved risk. So make sure you have a strong compliance team for you to navigate in this early, but sometimes can be nascent space, right? To stay solvent, to also not be cut out of these normal banking rails.
Yeah. So I think, in the PayFi areas, it really matters to work with regulators to be compliant in order to get the mass adoption. Otherwise, you have a very innovative product, smart products, but that wouldn't get everyone to start using. And a lot of regulations that we have been talking about, be it Hong Kong one, Singapore, Dubai Vera, or even NICA in Europe, these are all the areas that we should be focusing and getting compliant with. So thank you, thank you for all the insight. I guess we have a good representative in banks and insurance as well as the crypto exchange. So any questions that you would have, we will be around in the networking area. So catch us up, and thank you for your time.
Thank you.
Cheers.
Thank you.
Thank you so much. Thanks to our brilliant panelists. Okay, let's take a group picture first. Please look at the center, our photographer. 1, 2, 3. Thank you. Thank you so much. We have gathered invaluable perspectives on this topic. Okay. 我们衷心感谢我们嘉宾的分享，你们的政治拙见都让我们受益匪浅。We appreciate our panelists' valuable contributions. Now, let's leverage our collective expertise with further dialogue. May we invite the following guests to come on stage for our next panel discussion. 马上邀请下一组的嘉宾，他们讨论的主题是 Web3 支付金融版图的革命。The topic of the panel discussion is the revolution of PayFi landscape. Please give a warm welcome to Mr. Yan Li, EVP, Head of Products and Strategy Products of RD Technologies. EVP RD Technologies 执行副总裁兼产品与产业负责人。Ms. Lily Liu, President, Solana Foundation. Mr. David Rogers, CEO of Asia Pacific B2C2. Mr. Stanley Ho, Partner of Head of Asia, Highmind Capital. Mr. Donato Pio Girana, BD Head Middle East and APAC Off. 掌声有请我们5位的嘉宾。谢谢。
Hello, hello. So thanks everyone for attending this panel session on the revolution of the PayFi landscape. So as mentioned, I'm Ian Lee, actually a new joiner of RD Tech. I came out of ZA Group and was part of helping the bank. So you saw Devin just now, so helping getting that off the ground as well as the other businesses that we have in terms of insurance and software. So anyways, I'll let the rest of the panel run through their introductions, although many of them don't need much and well recognized in the industry. But running from this side over, I'll let Lily and David and so on introduce themselves for a quick minute.
My name is Lily Liu. I'm the president of the Solana Foundation, and I believe it was here at Web3 Festival last year that we first started talking about PayFi. So great to be back.
Hi everyone, my name is David Rogers. I'm the APAC CEO of B2C2. We are one of the original and largest market makers and crypto providers of liquidity, payment services and financing in liquidity. We're based in Singapore, Hong Kong, Tokyo, and headquartered out of London. And yeah, good to be here.
Hi, my name is Stanley Huo. I'm a head of Asia at HiveMind Capital. We are a digital asset investment firm headquartered in New York with offices in London and Hong Kong. We do venture investment, liquid trading, also digital art investments. Great to be here.
Hi, my name is Donato Pioggiornera. I'm leading BD for Middle East at APAC at ARF, and we are a Swiss licensed financial institutions providing pre-funding liquidity to PSPs, MSBs, UTCs, and any other licensed financial institutions, specifically for pre-funding. Thank you and happy to be here.
Awesome, awesome. So we have a diverse cast to discuss the topic. So I'm going to start it off a little bit easy because I understand that not everyone was here in all the previous sessions. So simply, what does PayFi mean to you guys in terms of what we're trying to discuss in this scope of conversation? Wanted to start off with Lily because I'm pretty sure Solana pretty much propagated the term or established or formalized the term in the industry.
Yeah, so I'll give you a little bit of the origin story. I've been in crypto for about 10 years, and so I feel like I've been through so many of the different cycles and heard about every one of the various narratives. I think all the things in crypto that are happening, none of them are new. They've all been written and blogged about pre-2015, and so as someone who got into crypto starting with Bitcoin back in 2013. I remember reading the white paper for the first time, and it says peer-to-peer electronic cash settlement, or a system. And it doesn't say digital gold, it doesn't say store of value. And I remember back in the day when Bitcoin was blockchain and blockchain was more or less just Bitcoin, there was a lot of discussion around kind of like the ideas of Bitcoin, and there's the movement that Bitcoin started, and there's Bitcoin the protocol. So if you talk about Bitcoin the movement, that was about creating global financial infrastructure and peer-to-peer electronic cash system. Now, it's great that Bitcoin the protocol has now taken on this role of store of value, digital gold. That is the better value accrual strategy for Bitcoin the protocol. But then to me, thinking, well, when are we going to have this, let's call it global payment system, global settlement system, global financial ecosystem that everyone can participate in, that is equally available to anyone who has an internet connection. This idea that if you have an internet connection, you have a bank account, and so that's kind of been my original motivation for getting into this space to begin with. And so last year, I'd been thinking for a while about, initially I called it settlement-based DeFi. And I was talking to Raj about this, one of the co-founders of Solana. He was like, what is that? Settlement-based DeFi. He's like, you need a better name for that. And so I explained it in kind of verbal paragraph form to him. I was like, well, it's about creating new financial primitives that are not based on a trade, but actually creating new financial primitives that are based around actual commerce, right? What is the difference? Well, a trade is, if you think about it, it's token in, token out, right? One token for another. And traditionally, stablecoins are a big part of that, but there's a lot of crypto trading, and that I would say is genesis of much of what happens in this space. But most economic activity, we're talking about human economic activity, is not token for token. It's not a trade. It's actually a settlement. It's a transaction where you're trading, let's call it a token for a good or a service. That is the vast majority of human activity that exists. Economic activity exists, period. So I'd been thinking for a while, why isn't there a robust economy and new financial primitives being built around that? So to me, PayFi is about building new financial primitives around a payments layer, a transactions layer. Okay, so then why is crypto unique for that? Well, on the trading side, crypto is unique because you can have access to entirely new assets 24/7 and do all sorts of things with them. What's unique about payments and transactions in crypto from like a commerce perspective is that you can have, instead of 1 to 3% in 1 to 3 days in order to clear a transaction, you can do it basically for nothing with no time, right? So it's like super fast, super cheap, blink of an eyeball type of thing. And so I think that oftentimes articulation for why crypto payments are useful is because it's cheaper. Instead of 100 to 300 bips, now like 10 bips or 15 or whatever it might be, cheaper than Stripe. But I think that's the cost articulation for it. There's a profit articulation here as well, which is if you can save 1 to 3 days on every kind of like payment movement period, then that's actually very valuable because that actually introduces a new profit pool based around the time value of money. And that to me is the real opportunity. So anyways, I know this is a long story, but essentially PayFi to me is around creating new financial primitives around a payments layer, both on the cost side as well as the profit side.
Go ahead.
Okay, yeah, my turn. I actually hadn't heard of the term PayFi until we started talking about this panel. So like, I'm grateful for Lily's sort of explanation of that, because it was certainly new to me, even though I've been in crypto for 5 years. So at B2C2 we're a large trading firm. By way of context, we probably trade between 5 and 10% of Bitcoin's legitimate, measurable volume every day. So we have a very good insight of sort of what the market looks like. But payments kind of came to us more as an artifact of what we do as a trading company for a very large, at-scale institutional business. We service 700-800 clients, mostly in that sort of retail platform, brokers, settlements, corporates, fund space. And actually what we realized is that we were doing an awful lot of payments flow, as Lily describes. And we didn't necessarily sort of realize it at the time, because the point that we've just made is a transfer of value process that takes place very efficiently over and above traditional markets. Now, what happens is when you step in as a liquidity provider that has a large balance sheet, what we're able to do is provide that balance sheet velocity that we were talking about to our clients by essentially funding that difference between instant blockchain movement of digital asset and fiat asset moving back in the other direction. And we were able to sort of get that going pretty quickly. And what we realized, particularly in Asia, is that 40 to 50% of our business is payments business. Retail platform, for example, a huge number of them in Asia where fiat remittances come in from the retail segment, and then that is converted into a crypto-based asset, and for the purposes of treasury management, there is a rebalancing event. We facilitate that, and that is all payments flow. And what we've been able to do is sort of disintermediate a lot of that fiat traditional slow-moving asset through blockchain technology. So that's how we kind of think of payments technology. It's that facilitation of that movement of value.
Well, I guess for us, we look at PayFi more from a investor's perspective. For us, stablecoin and payment platforms is one of the key verticals that we look at for venture. I guess I've been here like in Hong Kong 15 years, so I've been covering Greater China from more traditional finance perspective. So I've seen the takeoff of payment platforms in China like Alipay, WeChat Pay, totally transform the payment experience. So I think the same kind of progression is happening in Web3 crypto as well. I think stablecoin payment, instant settlement, like David said, is still for us is like the biggest consumer use case. We think that will go to the next level in the coming years. So this is an area that we are very excited about, being like protocols like Solana that supports easy like adoption for consumers, easily scalable, and then projects like, for example, like RD that supports stablecoin adoption is like a area that we are very bullish on.
Yes, and for us at ARF, we really see it pretty much with what Lily was describing before as time to value. For us, PayFi is all about real payments, first of all. Payments, as of today, are really more about messaging rather than movement. every time that you are triggering a payment, you're basically triggering a messaging system, a very rigid and broken one. And what PayFi really does is basically bridging the gap between the required speed of that payment and the rigidity of that messaging system that is actually triggering the payment. And the way PayFi does it is through stablecoins, by financing global payments and making sure that the liquidity moves as fast as information itself. And that's what we're trying to do at ARF. Like every day you have more than $4 trillion locked in pre-funding accounts worldwide. That's extremely costly, extremely inefficient, especially considering the high increase on the cost of capital in the last few years. And yeah, that's what really for us PayFi is all about.
Awesome, awesome. So starting from the beginning at something at the very fundamental conceptual level, technology level, easing into practice and execution, and then B2C2 with a balance sheet just kind of like inadvertently easing your way into PayFi without really thinking about it too much, as much as this a business opportunity. And then investment space, looking at widespread where the adoption is, and then a true practitioner trying to leverage chain and getting it right. Very interesting. So I guess then the next question then is naturally like, where do we see a lot of this like convergence of this like payments behaviors and where DeFi might come into this, or how the infrastructure really plays into it heavier? Maybe starting with Stanley, your view on like the top-down landscape and how you're looking at allocating capital at the right places on this topic.
Yeah, so I think payment, cross-border payment using blockchain technology is something that we think will flourish in the coming years. Right now, it's still, I think, in the early stage. People have seen the adoption of USDT, USDC, very much US dollar-based stablecoins. But then we do see there's a need for like kind of the last mile delivery problem similar to Web 2, where users have local currencies, maybe on blockchain, but then they do want to we need people to be able to easily spend the crypto assets in like real life scenarios, or send value to different parts of the world. So I think projects tackling those problems are the founders that we constantly are looking for. I think a few criteria we will value for these founders. One of them is regulatory compliance. I think for the industry to move on to mass adoption, we need to have platforms that's embracing regulation and make sure that they're compliant, first of all. And then secondly, I think these platforms we like platforms that partner closely with large liquidity providers or exchanges to make sure there's easily there's a liquidity when you want to own or off-ramp. Second of all, I think lastly is the kind of user experience. We have seen a lot of like good UX in Web 2 apps. I think that's something right now the Web 3 dApps are still kind of lacking. It's something that we are looking forward to in this cycle. And I think especially in Asia, given like there's a large consumer base here and people have been adopting crypto relatively early, I think this is a great place for founders to build this PayFi or cross-border payment blockchain projects.
Cool. I don't know if anyone else in the group want to comment?
Yeah, what I'm really excited about in APAC is, if you look at, there's kind of like talent specialists in various verticals around the world, right? So what are some of the examples is some of the best quants and HFTs there in Chicago. That's like a density of talent. Obviously, there's a density of talent around software engineers in Silicon Valley. There's a density of talent around consumer applications developers here in GMT+8. And one part of that, that incredible talent density is if you look at the last 15 years, who has created really, truly unique and scale payment systems, not just the fintech apps, the super apps, although it's certainly a big part of it, but then also where have you seen these like all sorts of different payment networks actually be built and scaled over the last 15 years, and that's really actually out of this region of the world. And so in my opinion, some of the best payments talent out there is here sitting in Greater China, and also GMT plus 8, sort of this APAC more generally. And so I think that there's like really unique payments talent and payments insight and depth of talent in this part of the world, better than anywhere else in the world, I would say. And so I think that also dovetails pretty well with the underlying value proposition of PayFi, because in the Western world, they own the dollar, right? The U.S. doesn't have an issue with dollar access because everyone has a dollar bank account. And whatever you think about the fiscal state and the monetary policy of the United States, it is still the reserve currency. So people don't really think about currency, right? I can tell you, basically anywhere else in the world outside of the U.S. and Europe, people think about currency risk, managing multiple currencies all of the time, particularly if you are a business that has any sort of international ties, export, import, so on and so forth. And so these topics around creating more efficient payment systems and programmable payment systems just has more value in this part of the world where you have sophisticated, mature economies and an incredible amount of trade. Maybe that will change. It's going to change a little bit given the goings-on of the last couple of days, but you still have an incredible amount of cross-border payments, financing solutions, trade finance, currency management, where creating more efficient programmable money applications based on what we call PayFi, that's kind of like application vertical, I think just has distinct value here, and also draws upon, I think, the world-class talent that you can find here you don't find elsewhere. So in the US, we think that, we created PayPal 25 years ago, fantastic. Very innovative, right? And a vision that still motivates today, which is that you would have money, the convergence of data and money, and that's what blockchain does, makes data into money and then money into data. Okay, but if you look at who's actually really executed on that and made that into a truly sort of integrated consumer experience, that insight and that talent sits in this part of the world.
Okay. Very insightful. Moving on to the next question, and double-clicking a little bit on some actual operating settlements or what the settlement layer might look like. So David, you mentioned that leveraging blockchain and then to disintermediate and then leveraging your balance sheet. I'm very curious to kind of hear how you're thinking about or what has changed leveraging blockchain and how this ecosystem has evolved and how that shifts the economic model. And maybe some additional thoughts from Don afterwards.
Yeah, I think that's it's a multifaceted question. I mean, I think one of the ways that we look at it is the traditional finance system has not had the risk appetite, desire from a regulatory, societal, local scamming problems like political pressure, etc., to implement any degree of more efficient settlement process. And in stepped blockchain to solve a lot of those problems. Now, when you talk about infrastructure, a lot of the problem is that we've had an industry that has largely tried to disintermediate current channels that still weigh the industry down, but actually facilitate it at an arm's length. So it's why you've seen the explosion, again, particularly in this part of the world, of payment service providers that are happy to be the step out for major banks underlying their movement of value. Now, that's even before you get onto blockchain-related technology. We have this kind of front row view of all these payment service providers throughout the region as a wholesaler sitting there. But the banks are happy to look at this stuff and say, okay, I'll offset the risk because that payment service provider is happy to be facing off to casinos, Bitcoin ATMs, anything gambling, shipping, exporting related that carries a different risk profile. And that's the demographic part. Now, the actual technology part is actually very straightforward because it's as I described it before, it's a simple movement of value on-chain that's underpinned by a funding trade on the other side of it. Now, that doesn't happen automatically, right? Like, you have to be able to be in a position to facilitate that, which is why firms like B2C2, they exist as a wholesaler to a lot of this this process happening. So I think that's the first thing to say. The banking ecosystem in the traditional world is nowhere near being able to facilitate this, and that's why I think this is why this this kind of conversation is very, very important. Now, the second thing is, and I would add specific to Asia, is that if you looked at the payments ecosystem in 2024, of all the kind of electronic-based payment services with all these different providers, over half of the $2.5 trillion worth of traditional payments transfers were made right here. And it's why we've seen this migration of many firms setting up in Hong Kong, in Singapore, under a licensing regime that is forgiving and able to sort of do this and support the underlying blockchain technology. Now, that doesn't mean that they necessarily understand the underlying blockchain technology, but they're willing to do it. And as we mentioned, a lot of the talent has come here too. So I think you're definitely going to see a more liberalized banking approach in this part of the world. And because a lot of the talent and the licensing and the regulatory regime has kind of gravitated towards this part of the world, I would expect it to be the driver of growth in payments.
Maybe I'll just touch base on the infrastructure and the PSPs that David mentioned. Regarding the infrastructure, at ARF we are working together with Human Finance, and we are raising DeFi pools that are powered by Solana, actually, to then finance pre-funding accounts of our customers, also including PSPs. As I mentioned before, today there's $4 trillion on average locked each day in pre-funded accounts. So far we have done $4 billion in credit at ARF, but I would say, still a long way to go, definitely, but each day we're getting closer to that. No? So the idea is to hopefully remove pre-funding accounts. And we are doing that, as I just mentioned, by leveraging DeFi pools also. So that's one way in which we definitely are using the infrastructure and the technology to ease pre-funding. Regarding the PSPs that David mentioned, PSPs of course are also requiring pre-funding. No, so I just spoke like the other week with a PSP, very big one, that they're getting T+1 from Checkout, Nuvei, and so on, and then they have to pay Visa, MasterCard, I don't know, 1 million, 2 million, 3 million each day. They are pre-funding those accounts. We can provide that liquidity, and that's what we are doing. Again, we are trying to free up worldwide pre-funding capital that is locked in pre-funded accounts, and blockchain and also infrastructure partners like Solana are definitely supporting PayFi players like ARF in doing so.
Yeah. So expanding on the application layer in this case, directly with ARF, as well as kind of speaking to that capital efficiency component that I guess like B2C2 got the advantage from the get-go to enter the game. So very interesting. So then you spoke actually already a little bit about the regulatory shifts and the regulatory context and how important that's going to be. So how might, and you also alluded to this immediately just now, about the recent context of tariffs and so on, but then also the ongoing executive orders and things that might shift around the corner. So what are your kind of like initial views for the whole group, but maybe starting with David because you kind of kicked it off. Go ahead.
On the regulatory side, you mean?
Yeah, on the shift.
I think. I guess I should be sensitive because we're sitting here in Hong Kong and I lived in Hong Kong for 11 years, but we've just set up a business in Singapore as it happens, so hopefully I won't offend anyone by what I'm about to say, but the MAS have been fairly forward-thinking in the way that they bracket crypto digital assets trading within the payments vertical of their licensing regime, and there's a whole other sort of capital markets side to that as well, where there's very specific capital adequacy requirements, much more onerous in keeping with traditional markets in FX and credit and equities and so on and so forth. But one of the things that we've learned from the MAS is that they're trying to understand the movement of value and what that means for things like consumer safety, money laundering, CTF concerns over and above the actual management or oversight of crypto trading. And it's a lot of what I think the US have kind of become unnecessarily entangled in about the definition of securities and whatnot. And why is that important? Well, they're caring more about the actual that movement of money and a regulation therein and granting license, which then gives credibility to the movement of what we're talking about here, right? It's the blockchain technology. It's maybe something that they don't fully understand but are willing to embrace. And I think that's where we're seeing the progression. And I think most regulators are taking a fairly sort of open-minded view to this, but it's very clear that between the jurisdictions, they're thinking about things different way, right? So here in Hong Kong, the SFC aren't necessarily focusing on the payment side as such. They're focusing more on kind of OTC trading, on custodian, and the actual movement and the mechanics of trading things. So I think depending on where you go and what your type of business is, will drive change. And the final point I would make on this is that if you look now at all those companies migrating to Asia, it's one of the reasons why they're moving to Singapore. So you see the Revoluts, the Wises of the world. These are non-Asian companies moving to Singapore, Hong Kong, etc., because of the fact that they have got the appropriate licensing regime and support from the regulators.
Lily, maybe you want to add?
As you might expect, I do think that the only place you can really build this at scale is on Solana. And it took me a while to kind of reason my way through this before we started talking about it publicly last year. Because the question that we've gotten in crypto for many years is this ever going to be good for anything but speculation? And if so, when, where, and why? And so as I started thinking about that, I thought, will we ever actually build this peer-to-peer electronic cash system? And if so, what are the conditions for that to potentially sort of have some glimmers of reality? And I thought, okay, well, what are some of the conditions that you need? One is that it actually has to be performant. And I'm still somewhat shocked, honestly, to this day, how many people in crypto are willing to rationalize non-performant blockchains, or to say that performance doesn't matter. I just think that's not a practical perspective, because if you want, let's call it 1 billion people to be using this, and their everyday experience is to have this sublime instant experience in any consumer application, how can you expect any of these people at scale to really adopt this technology if it's essentially like dialing up in a 56K modem? That's not a thing. Okay, so that's number one, it's got to be performant. The second is that you have to have liquidity in money that people actually use. And so again, we can have endless conversations about what we love. Bitcoin, I do too, absolutely. But then there's an inherent conflict between saying, I love Bitcoin because store value up only, and being like, you should spend it, right? And we have these memes around that silly, stupid guy. We all make fun of them for spending $10,000 or 10,000 Bitcoin on a pizza. And so you don't actually want to be using it for spending. Within some reasonable degree, like you may want to transfer it ever so often, but to say that in any near-term perspective, I'm going to be using my Bitcoin for actual consumption, that's not a thing, okay? So you have to have liquidity in money that people use. And so no matter what your ideological opinions are about fiat currency, that is the money that people use that underwrites all commerce and goods and services. You have liquidity in that. Simply put, you have liquidity in stable coins. And then the third condition you have to have is, well, the entire purpose of these GitHub repos, at the end of the day, Solana is just a GitHub repo, is that it is programmable. And who creates these applications? Well, it's not anyone with Solana.com or Solana.org as their email address. It is an open source community, the same people that have breathed life into Linux. It's all open source developers, so said another way, you have to have developers and liquidity and talent, so to speak. And you have to have all those three things in the same place. And when I look around, I don't think everyone else has already rationalized themselves into a state of accepting a trilemma, which is that I can have developers and I can have TVL, which, by the way, is different from transaction volume, and I concede that performance doesn't matter, and I will try to persuade you of that. Just a common perspective in, I would say, probably 80% of this industry, which I just don't think makes any sense. So you've got to have all three of those conditions, and I think that there's only one place today. Maybe there'll be some other places in the future that can actually fulfill that in order to create robust market. So that's my perspective on kind of enabling infrastructure for peer-to-peer electronic cash systems.
Yeah. So really going back to basics in this case.
Also, yes, I'm biased.
Yeah,
So.
yeah. And in terms of the trilemma. But I guess going back to maybe Don on your side. So I know from RD side as well as your side that we spend a lot of time like navigating like all the right licenses or partners that have the appropriate licenses on the other side of the fence to facilitate this PayFi, whether on Solana or elsewhere. But in your view, like have you been observing any particular shifts in regulation or at least like certain geographies, or how you're handling particular geographies trying to leverage Solana as a primary blockchain and so on?
Definitely. Well, with regards to regulation, there are two main topics I'd like to touch base. Now, the first is, of course, stablecoin regulatory frameworks, like Hong Kong. That's definitely something that we're looking at very closely. But then, most importantly for Bitcoin, I would say it's VA, basically OTC exchanges licensing. First of all, are going to be extremely critical to make PayFi go at scale, for on and off ramping. And in Hong Kong, we're definitely looking very closely at VATP, VAOTC, and the requirements, especially pre-funding requirements that those entities have to go through by the regulator in order to operate. And these, again, are especially interesting in Hong Kong because there are pre-funding requirements, especially for VATP. VATC it still has to come, the regulation, but there are pre-funding requirements. There is liquidity need, and of course it's a segment that we are exploring and that we are looking at very closely. Here I'll just touch base on the what that means. Like why there is a pre-funding requirements. That of course for OTCs in Hong Kong, it's definitely a regulatory need because the regulator is actually specifically asking for those OTCs, those VTP, in order to operate to have a pre-funding account. But OTCs also use us for liquidity, and again can use PayFi basically wherever they want to provide same-day on-ramping to customers from which they're collecting in countries where they don't have their own banking rails. The collection process takes 1-2 days, and there, if they want to provide liquidity to their own customers, they would have to pre-fund, right? So again, we have OTCs that come to us, apart from Hong Kong and the VATPs, where there is a regulatory requirement. This need also comes when, because of the banking infrastructure, the rigidity of the banking infrastructure that we just mentioned at the beginning, the collection process takes more time than the desired time for their customers to on-ramp. So just here briefly touching on it.
So still a lot to navigate in terms of regulated spaces and fiat, and still like stablecoins and trying to leverage blockchain. Still a lot of challenges ahead. I guess like double clicking a little bit into use cases then. Maybe you can kick it off, and then others can add in. But in terms of like particular use cases, then, as we discussed, like you obviously have some, you have your own ARF business and releasing like pre-funding accounts and so on as a general business model. But what kind of like activities do you think are kind of driving the PayFi space? Or like what kind of like, I don't know, a trade or exchange or OTC, even if it's just OTC. But what are you seeing as the primary use cases?
Definitely. So here again, also we are biased, right?
Yeah, of course.
So obviously we look at pre-funding. So the main use cases, as I mentioned, so the first one I just talked about, so OTC. So here for same day on ramping, basically OTCs need to provide pre-funding to their customers if they want to provide the same day on ramping in countries where they can't collect on same day, obviously. So that's one clear use case where we see strong traction. Another one is for basically global payouts for PSPs and cross-border payments, MSBs. So the traditional model is the pre-funding model, right? Where basically the PSPs or MSBs, they would have to pre-fund in the receiving country, and that's of course that's very costly, but it's also very risky in some countries, especially in emerging markets. where you have, for example, the FX risk. No, so there are several. It's not just costly, but it's also risky. What we see is that definitely there is a PayFi demand there. No, so they can use liquidity. They can demand liquidity based on the actual transactional volume, right? So instead of having costly pre-funded accounts, Nostro pre-funded accounts worldwide, they can demand liquidity when they need it every day, multiple times a day, based on the actual transactional volume that they require. These, I would say, are the main two use cases that we definitely see at ARF biased, but we definitely see it as driving PayFi demand.
Yeah, I was just going to add to that I think there's just this whole kind of strata of I would almost refer to it as shadow banking that sort of sits in the middle, where on my travels around the region, I've heard some incredible examples of use cases like this. If it's an exporter, and for the ship to be offshore, but for every day it costs them $250,000 fiat, and they need to, as soon as they dock, have that, and the movement of value takes place very quickly. Or it might be a casino drawing down significant sums of money every day. And what we see again as the kind of the wholesaler in this game is that we see dozens and dozens of firms that are happy to set themselves up and on a relationship basis be that middleman, but simply the pass-through and the clipping of the ticket in order to do that part of the transaction. And to your point, Don, pre-funding needs to happen, but that doesn't come for free, right? Like there's a cost of carry for that, and then has to be an injection of capital to fund that trade. I mean, at BTC2 we have an expression that we run derivatives lines, funding lines, a very large OTC business, but we say that every trade is a funding trade, right? Like, and you have to be able to commit balance sheet to that. And I think that's one of the exciting and interesting things about our industry, right? Because there's so much fragmentation of this, and there's so many unmet needs. I think that's what's really interesting about this PayFi space. And I think the stablecoin part is a different conversation about how you sort of transact that. But I would say that the facilitation of value transfer to all these kind of sub-layers that the big banks won't touch is absolutely where that space is going to be filled.
Yeah, and I just want to add also from a consumer perspective, what we are seeing is that there's more and more traction for projects to bridge different stablecoins and from like on-chain assets to fiat across different regions. I think, for example, from like LATAM to Africa, Middle East, and Southeast Asia, like these are the regions where there's a lot of consumer holding like crypto assets where they're facing like high inflation, FX uncertainties. So we're really great to see that there's builders building these kind of projects, like connecting the different pools of money through blockchain. And that may, like Lily said, may make crypto actually spendable. It's not just something you hold on to for forever. So that's an area that we think will take off. And the other one is we see projects tackling like spending crypto using like credit card or debit card. So again, like integrating fiat to crypto, make it like easily spendable. I think that's a theme that has been getting traction.
Yeah, that alludes to a lot of themes that actually Lily had already spoken to. Is there anything else you would want to add in terms of what you're seeing from a Solana lens, in terms of what you think are the biggest spaces that are growing in PayFi?
Yeah, I think Huma has been fantastic to work with, and I think that's part of the foundational, some of the foundational dApps that we need to have in this space, and it's something that is immediately useful and also very much scalable, accelerating cross-border payment and using velocity to create new profit pools. So low risk, depending on the product, between 15 and 20% yield. It's a pretty good deal for quite a lot of people, and so I think that is one of the starting points. I think that there's various forms of credit markets, and I think it's particularly sort of micro credit markets that are also going to become more broadly possible when it comes to maybe not so much like credit card kind of settlement across border, which is very low risk, but supply chain financing as well. I know that's also been a long time theme that people have been thinking about, working on, discussing, theorizing about for 10 years. And the ability to use these on-chain liquidity pools now at scale with the depth of liquidity you do have in crypto, stablecoins, which is unique today versus 5 years ago and certainly 10 years ago. I think it'll be interesting to take these on-chain liquidity pools and apply them to different credit markets. And I think that will emerge over time. I also think that if you look at like a payment processor, what are some of the core functions that they typically vertically integrate? And maybe folks are better off if you start to take away that vertical integration, which is they do kind of three things. They do the KYC of the inbound paying party. And then they also manage the liquidity and the actual cross-border liquidity, and so you're taking on a little bit your payment processor's balance sheet risk there as well, which is taken away with the liquidity pool. And then the third is that they manage pay and payouts. So in my opinion, a blockchain is definitively better at number 2 and number 3, meaning managing liquidity and managing pay and payout addresses transparently, programmatically. And on the first, I think is something additionally that at least we here at Solana are working on, which is to have attestation systems. So that, at least for me, I scan my face on SumSub and Worth Persona or Jumio or you pick your platform. I've used literally every single one of them all of the time. And if there's a way that you can now use that for DID and then also link that into a payment system, I think that's pretty powerful. And I think potentially could be, maybe this is the time that blockchain can kind of finally solve this white whale of a use case that we've always wanted to solve, on-chain identity. The critique of on-chain identity, why it hasn't reached adoption, is because, there's no reason to actually use it. Maybe this is one of the things that contributes to utility to actually adopting on-chain identity. And then if you unlock that, then there's many things that are not payments related that also get unlocked by having scale on-chain identity. So.
Oh, interesting. Yeah. Definitely a last mile. It definitely would help a lot of regulators. Then just like a quick last question then, maybe like 1 minute for each. Just like in 3 years, where do you think like a more PayFi native experience would look like for end users, whether enterprise or consumer? Starting from Don's side, working this way.
For me, it will be limited pre-funding, close to real-time payments. And that should translate to, at the end, ultimately lower cost for merchants and retail alike.
Yeah, I think, as I mentioned earlier, I really hope in 3 years consumers can easily swap different crypto assets with fiat across regions seamlessly. And then secondly, I think for institutions to come into the market, we're definitely seeing more and more support. Well, first from like a regulatory perspective, I think the U.S. Government has been, like with the latest initiatives, including the Bitcoin Reserve, etc. That I think that has really laid the ground for more participation by traditional institutions. I think that's still where the capital pool is from, and then we think there would be like many more use cases just in terms of like trading, or just use like crypto as a general new asset class, being like option, futures, different ways to allocate capital. I think in 3 years this will be a much bigger asset class.
I think you're going to see structurally a massive investment from traditional financial sources into the payment space. That road is already traveled down. We know that that's happening. There are some in the coming months. You're going to see some huge investments from well-known names into ostensibly smaller payment companies. I think you're going to see continued explosion in IP in the space among different forms. I think you'll also see consolidation, and I think in 3 years' time, that seems like a lifetime in crypto, but I think in 3 years' time, you're going to see a significant amount of control from large traditional financial institutions in that space, not just in terms of balance sheet intensive activities such as same day funding of transactions, but also just ownership of the payment rails themselves on and off chain, to be that bridge between traditional and new.
I wonder how much of, I think in 3 years there's just going to be full closed-end stablecoin-based loops. And so the need for on and off ramps is going to be much less in 3 years than it is today. I think that fiat is just going to be much lower velocity itself. And the high velocity in fiat-related, or like let's call it fiat currency, related transactions is going to be largely in stablecoins because it's just definitively better from both a cost and profit perspective. And I also wonder how much of the existing financial infrastructure is made redundant, even unnecessary by the advent of stablecoins. So if you look at the model of fractional banking, how much of that should actually exist if you have stablecoins? What is the role of a bank? Should they just be tokenized deposits? Well, if they are, and you have to have proof of reserves, then what happens to the lending side, where you're supposed to lend for home mortgages, a very common business model, at least in the U.S. banking system. Does that just all go away, and then a bank is essentially just fiat reserve, and then all of the other financial products to be made available then gets accessed on chain? So I think that there's some really kind of thorny questions in here because anytime you have new technology, which is fundamentally more efficient, more liquid, more accessible, more open source, then the value of the various middlemen in between is eroded over time. And I think that's also going to be the same for traditional banking business models.
Fascinating. Yeah, I think I lean a little bit. I asked the similar questions myself, and I agree. I think in my view of the 3-year time frame, I think if anything would be a lot more clarity and establishment of so-called regulated stablecoins as we are participating at RD with in the sandbox. So I think like navigating that landscape is a bit of what all of you are saying. Like, well, you're going to have our institutions that are licensed to do these official things. I think that might be where the landing point is, at least in that 3-year time frame. As you were saying, Lily, in terms of where, like, what is the role of banks? Well, I guess maybe just the licensed entity that's allowed to issue credit or something like that, right? And I think there's a lot of these guardrails, and then we can see that, whether it's like on-chain identity or these other things, maybe they'll replace a lot of that kind of traditional infrastructure in existing banking. But a lot to look forward to, I guess, or at least to navigate at the least. And then I'm sure it'll disrupt a lot of where capital will be deployed and need to be used. But I thank everyone in the audience for participating and listening into our conversation. But with no further ado, I think we can conclude the panel. Thank you very much.
Thanks.
Thank you.
Thank you.
Thank you. Thank you so much to our brilliant panelists for this enriching discussion. Will you please remain on stage? Let's take a quick photo to commemorate this session.我们一起合影，来记录这珍贵的时刻。1, 2, 3. Okay, thank you so much. Thanks for your wonderful sharing. Please be seated. 接下来，我们邀请下一组专家为我们分享。他们要分享的主题是稳定币的未来发展。Next, let's shift our focus to another topic. What's the next for stablecoins? May we invite Mr. Gary Liu, co-founder of CEO at Terminal 3, Ms. Jeannie Lim, head of APAC at Pasos, Mr. John Cahu, COO Asia at Galaxy, Mr. Abel Seal, head of APAC at Bigo, and Mr. Sergio Mello, head of stablecoins of Anchorage Digital. 掌声有请我们5位嘉宾，谢谢。
All right. Good afternoon, everyone. It's good to be on stage. Thank you, RD, for organizing this. inviting all of us to come join the conversation about stablecoins. I think there is a main stage panel with pretty much exactly the same title as ours, wrapping up right now with RD CEO Rita Liu on it, along with our friends Dominic from Standard Chartered as well as Yam-Ki Chan from Circle. But I'm going to guess that this conversation is going to be more entertaining than that one, so you guys picked the right one to sit down on. Here's how we're going to start. We are going to start with a very, very quick 15-second introduction per person on the stage to explain to you who we are and what our stake is when it comes to the stablecoin ecosystem. I'm going to start with Jeannie to my left, and then we'll go from Jeannie all the way to Sergio and then back. Jeannie, go ahead.
Hey, good afternoon, everyone. Thank you, Gary. So my name is Jeannie. I'm based in Singapore, and I head up Paxos APAC. And who is Paxos? We are the issuer and the blockchain infrastructure provider for USDG, or in some cases, you heard of PYUSD, USDL, USDP. So we are basically in the stablecoin infrastructure business for a long time. Looking forward to the discussion today.
Brilliant. Thank you. John.
Hi, I'm John Cahill from Galaxy Digital. I run Asia effectively as the COO for the region. And we are user, investor, sometimes issuer with our All Unity project on the Euro stable, and general supporter of payments and infrastructure across the board in crypto.
It would be easier to ask you what you guys don't do.
Very few things when it comes to crypto.
Abel.
Hi, I work at BitGo. BitGo is one of the largest infrastructure companies in crypto. So everything across custody, wallets, staking, trading, lending, borrowing. We have our own stablecoin as well. That's our stake in the game. But yeah, very excited to be here. Thank you.
Excellent. And Sergio?
Hi, I'm Sergio. I work at Anchorage Digital, which is a platform for institutions that need to get into digital assets without getting burnt. We have a bank in the US that is the first and only federally licensed bank, specifically for crypto, and also a Singaporean payment institution, and I am the head of stablecoins.
That's your stake. And I'm Gary. I'm the co-founder and CEO of Terminal 3. We're also an infrastructure company building in data privacy and security. With regards to stablecoin, we provide zero-knowledge cryptographic identity and credentials that help sew together the traditional finance world with the digital asset world. Regulated stablecoins are one of those assets that we serve. So we have a lot of infrastructure on this stage, and I actually think that it's the right kind of conversation to be had right now about what comes next with stablecoins. Because at the end of the day, stablecoin as an asset is going to serve let's call them sinew needs, connective needs between financial ecosystems, but it's really about the rails. At the end of the day, if the rails are not mature, stablecoins are not real. So we're going to talk a lot about that, but we are going to jump right into controversy. Actually, maybe it's not controversy. Over the course of the last several days, there's been a lot of news out of the United States. So we're going to start with that. Two major pieces of news. The SEC in the United States finally made public their guidance on stablecoins, effectively saying that the vast majority of stablecoins are not securities. Okay, that is very, very important distinction that they finally made. And the second piece of news is that the Stable Act, S-T-A-B-L-E, has made progress in both houses of Congress and is likely going to move towards congressional vote relatively soon, which means that a regulated stablecoin regime is coming to the United States. My first question for this panel, rapid fire first, so just a one-word answer. Is this good, bad, or neutral for the global industry? Jeannie, we'll start with you.
Neutral.
Neutral. John?
Good.
Abel?
Good.
And Sergio?
Good.
All right. Jeannie, you're going to be last, okay, on why it is just neutral and not good. Sergio, I'm going to go to you first. Anchorage, of course, really important in the United States ecosystem. Only, I believe, still actually chartered digital asset bank in the U.S.
Yeah.
So why do you say that all of these advancements of policy and regulation in the U.S. is definitely good for the global ecosystem?
It's good because the global ecosystem for trade and finance still is deeply anchored on the US dollar. So a faster, better US dollar on chain can only benefit the rest of the globe. As simple as that. And for how slow we've moved in 4 years of non-regulation, this step function increase in speed in Washington, D.C. is very well perceived by the markets. Don't look at the stock markets today. I mean, the other markets.
Well, even if we look at the token markets, it's still unsure of what people actually think about this. But I get your point. John, I'm going to come to you too, because again, a US-centric in many ways firm. You're the, and by the way, you said that you're effectively COO. You are COO, effectively CEO. That's the way I look at it.
Effectively.
Here in Asia, what are your thoughts about the coming regulations for stablecoins?
I mean, and you know, I spent 20 years in traditional finance, and I've worked in regulated businesses for most of my adult life. And I've been of the opinion, and continue to be of the opinion, that the only way to real broad adoption with any of the things that we do is through a regulated channel. And I think the US getting on board with regulation gives cover for global markets to follow and to iterate on what they've done. And so I think the world in a lot of ways has been looking to the US because of US dollar prevalence to lead the way. And we've kind of been stuck in the mud, and I think these things are foundational for building on everything that you put on top of it.
Abel, I'm going to come to you. BitGo operations globally. We still see BitGo as kind of, you know, Asians' own in many ways. You have major operations in this part of the world. Here's the controversial question I want to ask you. USD primacy is status quo. But a lot of people in the digital assets industry do not believe that is necessarily good for the future of the world. There are plenty of governments around the world looking for alternatives, not only to the US dollar as reserve currency, especially with the state of American politics today, but also looking at digital assets and digital asset settlement as an alternative for things like SWIFT. So why, in that case, based on what John's saying, why is a regulated US dollar stablecoin regime still, in your mind, good for the world?
Yeah, I mean, I'll answer the first part of the question first, right? I don't think there's been any alternative since everyone's tried to get off the petrodollar. There's just no alternative, and no one has come close to coming out with a good alternative. Stablecoins serve a very good practical use case, and therefore dollar-backed stablecoins have found their use case in the world today. You could actually argue that a regulatory clarity around a dollar-backed stablecoin helps reinforce dollar hegemony as well. Because as what Sergio said, a lot of the world's financial capital and institutions are based on the US and from the US. A lot of people still look to the US for that direction, right? And therefore the US coming out with some sort of clarity, we may not agree with it fully, is still a good thing for all of us going forward. Right? And again, it's obviously starting from a very low base based on the hostility that we've faced over the last 3-4 years now. So some clarity is good. I think it paves the way for us to move forward, and it helps reinforce dollar hegemony, which I think for the time being is what serves a very good use case for the world.
I would agree with that. You know, I think you look where stablecoin adoption has picked up the most inertia, you know, over the last, call it 10 years, and it's in regimes that aren't dollar-based, with a population that is underserved, underbanked, and that is trying to maintain value for their labor and their earning. And so this is just an easier mechanism to do that, and I do think it does reinforce the dollar's prominence in markets.
In fact, a lot of the use cases, and a big reason why BitGo also decided to launch our own stablecoin, I'm sure very similar to USDG as well, is that because we see a lot of these corridors around the world, right? Whether it's Colombia to the US to South Korea, the US to Vietnam, the US to the Philippines, we see a lot of these corridors within our own ecosystem and our own client base today. So having our own stablecoin to help facilitate these transactions between our clients within our own regulated ecosystem just seems to make sense, right?
Jeannie, I'm glad we're finally getting to you. You said neutral.
I'm neutral, yes.
Do tell us why.
Sure. So USDG, after all, even though I work for the American company, USDG is an MAS regulated stablecoin. MAS being in Singapore and me representing Singapore, I have to be Switzerland in all the regulatory involvement around the world, especially this year's election year as well. But fundamentally, I believe demand is there. I agree, right? The demand of US dollars is still there and will continue to go there. With the action of stablecoins will actually, I think, would even increase, as we can see. But I don't want it confused with regulation as well, because I think around the world, we will need a global mandate or collaboration of what crypto or stablecoin really is, just like the traditional financial system. It's no different. Now, Singapore is starting. We are trying to get our new framework that will be live soon after elections. I can see Hong Kong HKMA trying to do something about it as well. They have an opinion. And then you'll have MICA in Europe talking about regulation about USDG or stablecoins in general. And then now US is following very, very closely behind. So I think a global regime is needed. It's not, I don't think it's just one that speaks for all, is my opinion.
We will definitely come back to regulation and whether or not harmonization of regulation is just a pipe dream in a little bit. But I want to throw another fun question to this panel. Tether. So Tether also in the last couple of days has very publicly announced to say, listen, we're now very seriously considering issuing a new stablecoin that can exist within a regulated regime in the United States. Do you guys actually think that is possible? And if they were to do that, are they actually going to be able to carve back any market share in the regulated markets? John, you made eye contact, so.
Yes, yes I did. I think in the current regime in the US, all things are possible. I think we're in a little bit of a pay-to-play sort of landscape, and certainly if the ambition of Tether is to participate in a regulated way in the United States, there's a pathway because they have plenty of capital and have probably created the single greatest money-making business, certainly per head count, in the history of time. And so I think that that channel is open. It seems to be open to anyone. You know, you can buy a golden visa for $5 million. I think that channel is open for anyone to get in. And, you know, I think the market will figure out what is a good product and a bad product, and certainly they have the resources to kind of see it through.
What about for the two US dollar-backed stablecoin issuers on the panel? What do you guys think?
Well, I don't know the final outcome, but I think there is certainly something over there. After all, Cantor Fitzgerald, which is run by Howard Lutnick, invested in Tether. I don't think Tether will have the confidence to say what it said without the investment. So there must be something over there, but the form, the structure, TBD, I guess.
I think it's going to take a long time because Tether is so far ahead in terms of their volume. And because they have been behaving like an unregulated stablecoin, they are an unregulated stablecoin. If they want to start working with governments like United States, MAS, Middle East, I mean, MICA, I mean, Europe is it's even tougher on regulation and compliance and liquidity. I think that they could, I'll never say no, but I think they will have to like pull back all their transactions. They're going to uncover a bunch of worms, and they were going to be spending a lot of money in the next few years fixing their current infrastructure compliance and regulatory policies.
John, go ahead.
I just want I think incentives matter, and if Team Tether wanted to incentivize their current users to move to a regulated channel, they have mind share and market share, and there are ways to incentivize your users to do that. I think it's harder to build something from scratch, and we commend, we've worked with both your teams to varying degrees on helping those efforts. But I think if you have market share captured, it's easier to move that around than it is to generate it from scratch as a competitor.
Okay, a very fair point. All right, we are now going to go back to basics.
How about my answer?
Oh, Sergio, go ahead, please. Drop in.
You want to hear it?
Yes, I do want to hear it.
Okay, this is controversial. So, what about the second biggest stablecoin in the world? What is it today? You all know what it is. Circle. Is USDC a regulated stablecoin?
They would claim it is.
Is it?
Well, there's no prudential regulator, right?
We have we have a no here. Is it?
Neutral?
Is it? No. Okay. So there was no way to get to tens of billions of dollars or hundreds of billions of dollars of size as a stablecoin issuer in the past 10 years with being regulated. So I understand why Tether did what they did. And I also understand that it's important to decouple the Tether token, USDT, from Tether Enterprise, which is now divesting in so many businesses, in investing actually in AI, in electricity for Africa, and so many different things, right? And so one of those businesses could definitely be a financial infrastructure in the USA. I don't see why they shouldn't go and do it. It's absolutely in their freedom, and the US as a system should encourage any businessman that wants to come with $1 billion check to come and open business, regulated business in the US. So that's my view.
I actually don't think that's that controversial at all, Sergio. I'm going to stick with you, and I want to start with you on the basics of the stablecoin business. Okay? There's still a lot of discourse. I mean, just a couple of weeks ago, I was leading a closed-door discussion with a lot of capital in the room. Tens of billions of dollars of asset managers in the room. And one of the key questions was, why do stablecoins matter? Like, why does it matter? Do we not already have good enough settlement for very, very large quantums of dollars and moving across border? Why on earth do we actually need stablecoins? Now, granted, some of them were speaking only because they were thinking about just the retail use case of stablecoins. And here in Hong Kong, by the way, and we'll get back to Hong Kong later, the retail use case for stablecoins is very limited because every single one of us who lives in Hong Kong has half a dozen digital wallets, and we can pay with an Octopus card pretty much everything, including taxis now, believe it or not. So what is the business case behind stablecoins? I want to start with you because you guys are a full stack banking solution for institutionals.
You're going to be a little romantic to understand stablecoins. Everyone knows the money flower here, right? Give me a nod. Money flower? Exactly. So when you understand what the various petals of the money flower do and understand what's treasury, what's yielding, what's transport and settlement, and you start to fuse those pieces together in a programmatic way, then you can start rebuilding the financial system from the ground up. That's when you understand what stablecoins are for. And that's why I refuse to say, oh, they're only for cross-border or absolutely for this or that. No, they're about re-engineering the system. They're not about a specific use case. And of course, when you re-engineer a system, you can get better use cases. So if you're talking to asset managers, what's important to understand is that they can finally have the same instrument, the same token, the same piece of something that can act as a money market fund, but at the same time as a settlement piece, and you can do some magic in the middle. And this is something that you couldn't do before. It was very expensive and also required a lot of intermediaries. So putting everything on the same level playing field and disintermediating certain parts of the system that today are necessary to obtain the treasury part or obtain the settlement part, but having everything on chain is what really works. It's very much about actually dodging the financial system, as they would say in America, and get rid of the inefficiencies. And I see why some of the intermediaries would not love it. In fact, I really think that banks that rely heavily on fractional reserves, which is part of the economy, and it's a healthy part of the economy, broad money creation, but still have to rethink how that's going to be made and redistribution of the wealth coming from that industry, because it can no longer just be kept in certain corners of the industry. It has to pass through directly to various stakeholders down the line. Maybe all the way to retail, and maybe not. That's another question, but it has to be redistributed differently.
Well, let's stick with institutional. John, I will come to you. Both you and Abel, very specifically, my understanding, do correct me if I'm wrong, both of your organizations provide prime services of some kinds. And stablecoins increasingly is an asset that is being used in the digital asset world for prime. So can we talk more from your points of view on the institutional use case, following up on what Sergio said, for stablecoins and how they create inefficiency in a market that may be still somewhat inefficient? And John, you can insert whatever you wanted to say anyway in there.
Yeah, I mean, from our point of view, we obviously sit at the intersection of a lot of capital flows, right? And to Sergio's point, if we have to sort of go back to the traditional infrastructure and then back into crypto and do this sort of ding-dong, it's just not efficient for our clients, it's not efficient for us. So stablecoins serve as a very standard practical use case in having to help facilitate faster settlement, faster transactions. Obviously, the whole talk about cross-border payments and settlement, all that still applies. on top of the fact that our institutional clients are not just crypto-native firms these days, but they are increasingly also corporates that are sophisticated and want to enable and optimize for the settlement and quicker time to transact and send funds around as well.
Can you give a specific example that doesn't breach any kind of confidentiality, but a specific example use case of corporate cross-border settlement that stablecoins make significantly more efficient than traditional rails?
A very interesting use case over here. I mean, there's a ton, right? But we recently helped a client borrow against his Bitcoin in USDT to facilitate a payment for a private jet. Because this client is in a very remote country where it was difficult for him to send fiat out. So if you think about this use case and expand it to not just high net worth individuals, but to corporates around the world, and the possibilities that they can do with this sort of settlement that breaches and sort of dodges the traditional financial industry, that will take weeks upon months for a facilitation like this to be completed, then the possibilities are endless.
Very interesting use case. John, I'll give you an open mic for like a minute or so, and then Jeannie, I got some infrastructure questions to ask you.
So you said that in our pocket we have 6 different applications that can move things fairly instantly. That's kind of an awful user experience, right? I think standardization is the reason why stablecoins matter, and being able to use them not only within the confines of a single bank's application and only to their customers, but moving it, to pay your taxes, or moving value around to do all kinds of different transactions. I travel a lot, and I have this huge adapter I have to bring anywhere because we don't have standardization in many things that seem very obvious. And payments, this is a purely technology-driven thing, and it all lives sort of on the internet. And so it's a great way to create that standardization and streamline and the efficiency that you get with it. I tried to pay my taxes out of my local Hong Kong bank account, and I went to the branch, and I waited in line, and I got to the front, and they said, "Oh, we don't do that anymore. We don't facilitate dollar payments to, the U.S. government." And so I actually walked out of the bank. I had to do an online transfer, and I walked into a meeting with a stablecoin issuer, and I was like, "Look, based on my experience from 20 minutes ago, we have to figure this out. We need people to have a better experience, because if I have value that I've worked for and it's in my account and I can't move it to take care of my payment needs, what's a bank even doing?"
Well, that is great. The Stable Act defines stablecoins as a money instrument.
Exactly. Jeannie, it feels like you really want to drop your answer in here too. So please do, and then I'll come back to infrastructure.
Sure. So I want to come from the private jet use case all the way to more of a emerging market use case.
One that I understand more than private jets.
There you go.
Yeah.
Now we're going to hang out more with Abel now that he's got this client. So for me, the reason why I moved back from Chicago to Singapore was to head up a traditional fintech company called WorldPay. And I wanted to understand cross-border payments across Hong Kong to Singapore to Philippines, Vietnam, you name it. So anything that e-commerce touches and all the airline touches, I want to understand why everything takes T plus 2, 3, 4, and it depends on what payment method you're dealing with. It could be T plus 28. And if you go to Latin America, it's even worse, right? If you deal with boleto, I'm not sure if anybody knows here what boleto is. It's a payment method where it takes T plus 28 days to fund the merchant. So if you're Singapore Airlines or Hong Kong Airlines, you probably can afford a T plus 30 or T plus 28. But can you imagine you are a mom and pop seller in the middle of Vietnam, where you actually, whatever you sell today, you don't get paid until 30 days later, but then this is what puts food on the table. So I think there is, to me, the use case of crypto, stablecoins, blockchain infrastructure it's great to serve institutions, but I think the actual use case is to serve these underserved, underbanked economies of the world to do cross-border trade.
Cross-border in particular. Okay. Let's move on to infrastructure a little bit and the future use cases of stablecoin. I think what we've talked about on stage right now still feels like the future because there's a standardization and adoption and regulatory hurdles that still remain. But from a technology standpoint, we all know that the rails are moving significantly faster than those other inhibitions. And there are new ways that digital assets can now be used derivatively in particular that will benefit the world long term. So Jeannie, I want to start with you because Paxos is so deep on the infrastructure side. Can you tell us a little bit more about the next gen use cases of stablecoins because of technological advancement?
Sure. So for Paxos, we work with two different types of verticals. One is a traditional finance or banks. On the other side, we work with crypto native. So my expertise comes more from the Web 2 base, but I see a lot of payment companies, traditional acquirers in Hong Kong, and the big ones, just to name a few. They have asked us for advice for a few things. How do we incorporate payments, traditional payments, to do cross-border trade on the blockchain? So they're looking at blockchain payments. That's the number one use case. Number two, how do we partner with the USDG to transfer dollars to dollars in the faster way over the weekend, over the holidays, right? Because traditional banks don't open in these days. Number three, how do I white label my own stablecoin? I think that is the number one question that everybody is asking me in the traditional, whether you are Amazons of the world or Sony or Shopees of the world, everyone is curious, can I issue my own stablecoins? Until I tell them from a regulatory and compliance perspective how hard it is and how the journey between Paxos and PYUSD, how we help them through this journey, which took 5 years, they took a step back and said, maybe we should partner with you on USDG first, just to see how the traffic flows, what the use cases are, before learning how to white label a stablecoin.
By the way, what's interesting is occurring to me as we continue this conversation is that in this crowd, how many people are visiting Hong Kong from mainland China right now for this conference?
To ask you Mandarin.
Whose Mandarin is better? 是谁是国内的来香港来，就是为了这个大会 ？A few, okay. I think if we were at a main stage, there might be a little bit more. I think what's occurring to me is this. There's a lot of the problems that we're talking about when it comes to settlement and banks being closed on weekends and all that stuff and merchants not being paid, small business owners waiting a week to actually get paid for the products they've shipped out. These are not problems that exist in mainland China, have not existed in mainland China for well over a decade. Again, because one of the beauties of development within mainland China has been the fact that standards are set top down. And the digital payment rails have long now been native to the way that individuals and businesses operate. But the rest of the world is not like that. And so the moment you go cross-border, or actually even in what is supposedly a very, very advanced city like Hong Kong, these things are not standard. I just wanted to make sure that we're not losing at least the folks in the audience who are wondering, why are these even problems? Because day-to-day life just north of the border here, these are not problems.
But it's a closed system.
It is.
It's a very well run but closed system. So if you're talking about cross border, then it's a whole different ballgame.
For now.
All the four letters of
now.
the break, all the 4 letters of the break have very efficient domestic real-time settlement programs all the way to retail. PIX and UPI and
Pay Now, PromptPay.
Also Russia has one. And so it's appalling that in 2025, moving money cross-border is like using your passport and collecting a visa and then having to stamp or reapprove your passport when you got someone else to see it, visually turn the pages and find a visa or a lack thereof at the time of landing. This is more or less how traditional money still moves on SWIFT rails.
Jeannie, go ahead.
I was going to say, yes, if you have a credit card or a bank account, that makes a lot of sense. But I think this is where stablecoins make sense in our industry, in our part of the world, because not everybody has access to that instrument or even USD. So I just want to put that out.
Okay, can I ask then, what is the point of CBDCs then?
Go ahead.
I got it.
You go.
Have you tried using a stablecoin when there's no internet and no electricity? So a well-designed CBDC is supposed to be working like cash, also offline on hardware instruments, so that it could be used as a last resort with full resilience baked in. That's the point of a CBDC. And of course, disintermediating the banks in some or another way so that you simplify the system. So it does have a role to exist, and it can be private and can be secure, and it doesn't have to be a panopticon of currency. Of course, in certain countries, it has been designed to be a crowd control system. In others, has been designed differently, like Canada or others. It's a design choice.
And so, Sergio, you do believe that we have a future in which there are stable coins and regular coins and CBDCs living alongside of each other?
Absolutely. Just like you have many different type of money instruments today, and they're driven by technology, history, situational opportunity, regulation, and yeah, of course. Probably even multiple CBDCs in the same country to a certain extent.
Abel, I saw you lifting the mic.
No, I was going to ask the exact same question you asked, which is, can CBDCs live alongside stables in the same country, in the same jurisdictions, which John touched on?
I mean, I think the answer is yes. I mean, CBDC doesn't need to be the national currency for it to exist, right? There's a wholesale version that's operated and managed by the central bank, for instance, into the banking system, and it just kind of exists amongst the wholesale participants and not, used every day to pay for coffee and run your life. It's a monetary tool to distribute value to banks and major financial institutions.
Jeannie?
I think the use case for CBDC at the government level is more for...
Here comes the Singaporean.
What? What do you think I was going to say?
No, you're gonna speak on behalf of a government.
No, this is what
Whereas
I've heard.
everyone else on stage is trying to speak on behalf of the people. No, I'm kidding.
You know what? I think I've been talking to the regulators for too long. I'm going to start becoming a politician soon. No, but I think this CBDC use case for government, and I feel like the governments around the world is interested, including Singapore, Hong Kong, China, or matter of fact, India, is the ability to track the government programs and how useful it is. So I'll give you an example. We have a lot of food vouchers in Singapore, right? But the government pays out cash to everybody's bank account without understanding if those $500 is being used for food or drugs or alcohol or anything. There's no tracking system. And I believe that with the CBDC use case, because there's so many other government and social programs around the world, this will be a good way for disbursements from a government program perspective so that it can be reimbursed to the right folks appropriately, right down to what they buy at the grocery store.
I love it. Thank you.
That is definitely the Singaporean view.
It is.
Well,
I think you have real questions about privacy that I think are troubling and probably need to be asked at a somewhat existential level, because I think that's a core feature of cash.
Of cash, yeah.
Is privacy is built in. It also makes it an excellent channel for fraud and illicit activity. But I think that's an open question. I think that the global markets and governments haven't quite answered yet.
John, I want to stay on you and go back to something you said earlier. You mentioned that Tether is, at this point, I think, inarguably the best money-making company in the history of enterprise. And I want to talk about the fundamentals of the stablecoin business. Now, most of us in this room will understand the basics of how to make money from stablecoins. You get your customers to give you money, fiat, and then you issue a fiat derivative that is tokenized on chain that they can then do whatever they want with. But now we're holding on to the fiat, and we can make money off of that money, and that is how Tether has become so incredibly rich. But beyond those fundamentals, what are the other parts of the stablecoin business that we in this room may not fully understand that make Tether so darn profitable and make so many others, including folks on this panel, desire to issue their own stablecoins, including the our host here, RD?
Everyone loves a carry trade, Gary. In the history of finance, if you can make money with other people's money, that's where you want to be. And the construct, it really is just a great carry trade. I think what happens is over time, you have competing products that share the value proposition with its customers in a different way. You know, we have money market funds that are getting tokenized, and we're seeing those become adopted. And so eventually the market will decide, you know, what the right balance is and who should reap the rewards. And I think a lot of different companies will try different things and try to hold on to more value. Tether has held on to the vast majority of value for themselves, but being early and being on the biggest venues that were using stablecoins gave them a distinct advantage that they've only multiplied. And so I think that'll ultimately be up to the market to work out.
Sergio, you raised your microphone, so we're coming straight to you.
Tether is a 1 in a 100-year company, quoting its founder, because at the right time and the right place they executed a winning strategy. It cannot be replicated. Trying to redo Tether now is futile. It's impossible.
So we shouldn't just move to Lantau Island, all of us, right now?
And maybe other islands, but the point is that last week we all saw into Circle's finances by means of their publishing their S1 form in the US. And we all understand that the money in stablecoin is not on the issuance layer, but is in distribution. And therefore, a stablecoin issuer that does not have a solid, concerted, alliance-based distribution strategy that can gather momentum and critical mass from the very get-go is done. There's absolutely no way to buy your way into distribution as a sole issuer today. And by the way, that's why 3 of the 5 panelists partner into launching an alliance type stablecoin called Global Dollar. The point is that there's no new thing. There's no new Tether. There's only another way to do it, and we have to discover how to do it.
Do you have any suggestions?
Yes.
Rita's standing right there. She's all ears. Immediately shut my microphone off the moment I mention you, just so you know that.
I'll extend an offer tonight to join the Global Dollar. The point is that the money in stablecoin, to answer your question, is in distribution and is in compressing the layers of the stack that stay above and below the stablecoin settlement. So and where are we here? At PayFi, right? It's payments. It's everything that can be bonded and bundled together with the settlement in a way that no longer needs a traditional financial institution. So you disintermediate the legacy, draggy, inefficient part of the system. You replace it with more efficient pieces, and you create the space for new bips to come out of nowhere.
Just
Jeannie,
wanted to add.
Yeah, please.
You forgot one major piece, Sergio.
I did. I'll let it to you.
So the reason why the 3 of us here are partners is because we believe that the economics of stablecoins revenues should be overturned. So as the issuer of USDG, we are giving out majority of our stablecoin revenues to our lovely partners right here. So that is the major difference between us and everyone else. And you get regulated. It's compliant by Singapore.
And like I think being regulated and compliant gives more certainty, more comfort that what's being represented as a dollar is a dollar and is also liquid and accessible in a timely manner, which may not always be the case in unregulated businesses of any kind.
Okay, so if we go down what I think is a logical path, and we get to regulatory harmonization of some kind, at least in major capital markets, we get to standardization, so these stable coins we can use across most payment rails to purchase most products and services. And we get wallets that hold all of them, and they're cross-border, but also cross-chain transaction, all that. We stop being able to necessarily differentiate as consumers, as retail, one stable coin from another. Do we end up in a world where we have many different competitive stable coins and we're just squeezing margins for this business? Or is there going to be consolidation and we're going to end up with just a few? Abel, you look in shock, so that's why I'm coming to you first.
I think it's yes to both, right? We'll have to go through a period where, the market has clearly identified that Tether and Circle have a disproportionate grip on the stablecoin market. Right? The same reason why we launched our own stablecoin is to be able to give back the majority of the interest income to our network partners, period. So the starting point is very similar to USDG and to so many other stablecoins out there that are trying to break that dominance, right, by both Circle and Tether today. So I think a lot of new entrants will come into the space. In fact, I've sort of given up trying to keep track of all the new entrants coming into the space now. There's been so many over the last, call it 5 to 6 months. There will then be a period of consolidation because that splintering of liquidity is not good for the infrastructure providers that need to settle to meet our clients' demands real time. So I think it will be yes to that rush to compete in the space, and then yes, that consolidation that eventually will take place. The market will decide, I think.
Sergio, please tell me you disagree.
No, I can't.
Okay.
It's gonna be ugly because before it gets cleaned up. Yeah, we will see a lot of blood in the streets of issuers that decide to either commercial enterprises that want to go in stablecoin, bank and non-bank financial institutions that will decide to issue their own stablecoin and find the hard way that achieving global scale billion-dollar liquidity and distribution and network effect and acceptance it's not something A, you can just buy quickly or cheaply, and two, you can achieve actually. It's hard.
So when you say that there's going to be blood in the street, the thing that I think of is are the retail customers who end up holding the wrong stablecoin. So I want to use that as a segue to regulation just for a few minutes. I don't want to spend too much time on regulation. But just a couple of minutes. Oh, sorry, Jeannie. I know you want to spend a lot of time on regulation. Fine, let's talk about this.
I'm totally kidding right here. I'm not a policymaker, by the way. Traditionally, I'm completely partnerships person in tech, so I just want to make clear. But I do find regulation in stablecoins extremely interesting.
And I think all of us on stage agree. But in this situation, if we all on the stage expect that there may be blood on the streets later during consolidation, what should regulators be aware of in the way that they're dealing with regulation now and the setting of policy to, number one, make stablecoin businesses actually sustainable, which, by the way, is a problem with the regulatory framework that's been laid out here in Hong Kong, and number two, to try as best as they might to mitigate the bloodletting that eventually hurts the retail. John.
I'm not sure when to answer your question, but I'm going to say a few things. First of all, I think fragmentation, by and large, is bad for the consumer experience. And so if there's 1,000 different stablecoins, if they're all worth what they say they're worth because they're holding reserves that back up what they've issued, no one's really losing. You're losing the upkeep and the running costs, the legal and compliance costs. You're kind of running costs for the business, but your customer is still whole, right? There's not, don't think there's a risk of getting caught in the wrong stable unless platforms decide to not use it anymore. And so you could have a platform or a market, and we'll market make for all of them, that have N number of stable coins. As long as they're doing what they're purporting to do, and that they're accepted on enough channels, there's not a lot of downside for the customer there, apart from if there's fragmentation.
Uh-oh, Jeannie. Yes.
Sorry, John. I think I lost my train of thought, sorry. But now, I think what I'm going to say is, I think too many stablecoins or too many of anything dilutes the market, but it's good for competition, I agree. But in some cases, one of my competitors was depacked a few years ago, and it was because of bank fail. And that happens. So imagine hundreds and thousands of stablecoins starts rolling out in this market. What would the Hong Kong consumer do? What should they buy? It's already confusing that we have all these different cryptocurrencies and meme coins and AI coins in the marketplace, and I think people are confused. So in terms of stablecoins, I think there'll be a lot to try. And then as the global regulators like OCC, US, Europe, Singapore, Middle East, Hong Kong their framework starts to become clearer, you will see a lot of the competition start dwindling down, because I do feel that the liquidity requirement to become a stablecoin issuer is insane, more than a traditional fintech player like a payments company that can be rolled out any day. So it's a lot more stringent in terms of liquidity.
Is that a good thing or a bad thing?
For now, I think it's a good thing because it promotes consumer confidence. So when I explain to institutions what's the difference between USDG and my competitors, it's a clear answer. I have one-to-one. I can't touch your money. Your money is your money in a tier 1 bank in Singapore. I have to show MAS every single month. It's a monthly audit. It improves customer confidence. It improves government confidence. Then it trickles down to the retail business. And they're like, all right, this is actually safer than putting in a digital bank. Is an example.
Abel.
If I had to offer my unsolicited opinion over here, the point in which the market will decide what is a viable stablecoin and what's not a viable stablecoin will come down to the effectiveness of its distribution. Without the network effects, you can inject all the TVL you want, but if no one's going to use it, that will catch on and people will leave it eventually. The TVL will drain itself. But for those stablecoin issuers that can create the network effects, can distribute well, can sustain that distribution, that's when I think the market will sit up and realize that these are long-term winners. And therefore, the adoption will then manifest itself. So I think that's the trigger point.
And I do think that when it comes to regulators, the heart of the question I asked is that they may not understand that distribution point. They think about use case, they ask for use case, and they think about security, but they don't get distribution, which means, in Hong Kong in particular, and by the way, this is feedback that has been given directly to the regulators here, so I have no problem talking about it publicly, is that the way the regulatory framework in Hong Kong and in many other jurisdictions that are exploring this right now are set up means that unless there is money to be made in the retail business, it's not sustainable. And the reality is that there is not a whole lot of money to be made in the retail business right now. All of the use cases we're talking about, besides maybe off-ramping for retail, is really in quantum of institutional use case, cross-border, settlement, whatnot. And that is what I think everyone in the stablecoin business believes is the start. And regulators, I think, are still trying to catch up to understand that. And in lieu of, well, I think because they are so focused on security of these assets for retail, they have carved out and really put up walls for the actual use cases that make these businesses good. And that's what I do worry about for Hong Kong in particular. But thankfully, the regulators here, their ears are open and they are starting to listen. Jeannie, go ahead.
Agree. And I think same for MAS. I think this is the perfect timing for Paxos to be exploring this USDG with MAS and growing it, because they do come to us for help, for advice. They're not closed up. They're listening to us and like, what do we need to do? Are we open to do XYZ? And we give them consultation that, solution A becomes too expensive. Solution B affects global businesses. Solution C, there's pros and cons to every solution, and they're listening to us, which I'm very glad to be part of.
Sergio.
If I had a recommendation to the regulator, it would be to understand that stablecoins are a different thing, and they should be as separated from reserve banking, from fractional reserve banking as much as possible. Stablecoins are safe because they're not reserve banking. So the possibility to transit some of the reserves temporarily on a demand deposit account on a half-daily basis for a quick redemption is acceptable. But keeping 3.3 billion of USD on a DDA is exactly what stablecoin issuers should not be doing. So the more you separate the two, the fractional reserve banking and stablecoin issuance, the more you protect consumers. My last point is that I would not expect retail to really understand the difference between investment instruments of all sorts in any case. So it's up to the wallets, the fintechs, the neobanks, the applications that they use to access dollar balances or local currency balance to really decide which stablecoin to back those balances with.
John and I would be very happy to take you by the hand and lead you directly to the Hong Kong Monetary Authority offices right after this panel, if you would like. We have only a minute left. I'm going to do another round of quick fire questions, just single question, and we'll start with Sergio all the way back to Jeannie for you guys to answer. If you're thinking 10 years down the road, what excites you the most about the adoption and the use of stablecoins around the world? Sergio.
more money on blockchain than in banks.
More money on blockchain than in banks. My goodness. In 10 years. Excellent. Abel.
Well, if the on-chain metrics continue to keep up, to hold up, and there's more on-chain adoption, my hope is that stablecoin adoption will track that. If we even keep that, the penetration into traditional firms, traditional corporates, Web2 firms will be immense, and I don't think that's priced in today.
John.
Just a plumbing upgrade. I'm kind of here for that.
Jeannie.
I want to see more emerging markets getting access. I want to close the loop of financial inclusion. I want to hear T+0. I don't want to hear about T+2 or 3 anymore for small businesses. That would be my dream.
I love it. If I were to be so bold to add my opinion, it really is about equity. It's the fact that we have billions of people around the world that still remain completely unbanked. Even more that have never participated in the public markets and therefore have not participated in the last 70, 80 years of global economic growth because they literally do not have money. And a lot of them, it's not because they can't earn money, it's that they don't have access to money that is worth anything. And stablecoins fundamentally changes that for all the peoples of the world, and I think that that is the kind of evolution that I would like to see over the course of the next 10 years. Everyone here, can we please give a round of applause for our experts on this panel? And thank you so much for Artie for putting this together again.
Thank you so much to our brilliant panelists for the enriching sharing. Please remain on stage and let's capture a group photo together. In the center. 谢谢各位嘉宾的精彩分享，我们一起合影留念。Thank you so much. Please be seated. Now, let's leverage our collective expertise with further dialogue. May we invite the following experts to come on stage for our next panel discussion. May we invite Mr. Justin Chan, EVP Head of Business and Partnerships at RD Technologies, Mr. Michael Gao, Co-founder and CEO of Red Dot Pay, Ms. Rita Liu, Ms. CEO, RD Technologies, Mr. Michael Zhao, CEO of Kiko, Mr. Ezra Covers, CEO and founder of Kaliza. The keynote speech title is The Evolving Global PayFi Landscape. 掌声有请。
Okay. Thank you everyone for coming. We're all very excited to be able to really talk, almost 5 to 6 hours on really the PayFi subject. And when we created this whole conference and mini stage, we really wanted to cover everything from macro to regulation, to all the different stablecoin perspectives in terms of how this all fits into the greater scheme of blockchain technology and PayFi. And now, most importantly, is how people are really using this space, right? What are the applications? And we're so excited to really have the best builders right now in the space today, right? So we have Red Dot Pay, we have Clickle, we have Kaliza, and ourselves, RD Technologies. And what we really wanted to set up as well was a global perspective. So today we really wanted to understand how each one of our partners as well as our friends are building in this space and what it pertains towards what PayFi really means in the future. So very excited to start today. Maybe we can kick off with Michael and then Rita and the rest and go down the line to just briefly go through who you are and also what your business does.
Okay, I'm Michael, the founder and the CEO of Red Dot Pay. The company is doing the crypto payment. What we want to achieve is to make a crypto usable like a fiat currency. Yeah.
Hi everyone. This is the third panel I'm on this afternoon, so hopefully, Justin, please keep it interesting. So I can stay awake. So I'm CEO of RD Technologies. We're a B2B stablecoin payment platform in Hong Kong. Here in Hong Kong, we're rooted in Hong Kong, but servicing global businesses who need stablecoin for cross-border payment, fiat accounts, and fiat rails. So very happy to be here.
Good afternoon, everyone. My name is Michael. I'm the CEO and founder of Clickle. We are Abu Dhabi-based Web3 platform. And the Web3 narrative for us to be the Ripple killer. Well, I don't see a lot of smiling faces today because I know probably the market reaction last night, right? But hopefully during the discussion, we're not going to share some light and some market making opportunity. Thank you.
Hey everyone, I'm Ezra Cabral, CEO and founder of Kaliza. We help businesses with particularly cross-border payments in a regulated and compliant fashion, instant payments for paying suppliers, treasury operations, and offering dollar accounts based out of the US.
We might need that, dollar account.
Awesome. So thanks so much for the introduction. Maybe we can start from Michael from Clickle, because I think everyone sort of heard, Ripple killer. So maybe you can share a little bit more about what you mean by that.
Thank you. It's very funny. Last time we actually shoot it out there, right? We said we're a Ripple killer, and there was one guy put their hands up. I'm a Ripple investor. I said, okay, my friend, you can invest us too. Well, to say we are the Ripple killer doesn't mean we're actually going to kill Ripple, right? So for all you Ripple teams, right, you guys are safe. What we're trying to do is actually try to bring in a new business model, right? See, the Ripple is actually have been doing a very, very good job, right, for the past 10 years, building an alternative payment infrastructure, but it's actually really focused for business. Well, we think the mass adoption really comes in for everyone like you guys, or the people on the street actually start to have access to crypto and use that as a payment, right? This is why we're trying to be that retail accessible, DeFi native, as well as community-driven approach to complement projects like Ripple, and together with all the other payment infrastructure partners globally to really deliver a real use case to you guys. So this is why what I mean by Ripple killer.
Yeah, I think just to add on top of that, I think because all of the panelists are very happily are these partners, and I think we all share the vision, right? Which is what I said in my keynote, which is payment 3.0 will definitely happen, right? Will definitely happen. It's just a matter of time, which is a global cross-border payment system that's built on stablecoins and various stablecoins, not just one company's stablecoin, and also maybe also built on various companies' distribution channels, right? And for different use cases, like Red Dot pays on the retail, more on the retail side. So I think it's just like we share the same vision, which is a new cross-border payment system that's built on tokenized money.
Thank you, Risa. I think our panelists are very good with tidbits. So what exactly is payment 3.0?
Okay, so I always use this sort of evolution of a payment landscape, like we came up with, which is, so the evolution is payment 1.0 for cross-border payment was purely based on SWIFT and correspondence banking, right? And SWIFT is a messaging system. Correspondence banking is basically banks sharing private ledger, right? So you have Nostro, Vostro account, and so they settle based on private ledger. And that's why it's slow and opaque and expensive and not efficient, right? So payment 2.0 is our fintech companies, right? The second generation fintech companies, I'll not name the names, but there are a lot, who use their own liquidity pools everywhere. They probably have licenses around the world, and they achieve faster and cheaper settlement using their own liquidity pools, right? But the problem with that is it's capital intensive, right? Not so many companies can pull this off because it's a walled garden, right? Each company has their own gardens, and they don't share liquidity with all the players, right? Because it's their own walled garden. So payment 3.0 is based on stablecoin or tokenized money, which is 24/7, instant settlement, messaging and fund flow comes together and takes a few seconds, and the cost can be near zero, right, to settle funds from any corner of the world to another corner of the world. And the messaging and fund flow comes together. So that's payment 3.0, what we sort of call payment 3.0. 3.0 based on tokenized money. But the main point here is actually the democratization of liquidity, right? So it's not walled garden anymore. You have various ways, DeFi, CeFi, DEX, SEX, to offer liquidity for currency conversion and settlement. So that's why it's more superior than traditional rails.
Yeah, thanks for that. And I think one of the main terms there is really global liquidity, right? And I think today what we wanted to talk about was how global liquidity really affects each one of your markets. Just to share a little bit, Ezra, you're building within LATAM, Michael within Middle East and Africa, as well as Michael here in emerging markets. I'd love to hear your views in terms of how macro dollar liquidity and how the overall landscape has really pushed your businesses to be able to solve pain points that you guys are seeing within the market today. Maybe we can start with Michael.
Okay. For us, actually, it's a crypto payment company. Right now, liquidity is not a big issue for us. As Rita just mentioned, for payment 3.0, right? Using stablecoin, actually, there's no liquidity issue between us and between the PSP. I think right now the challenge right now is this payment 3.0 just starts, and how to make each corridor working is really challenging. So different country has a different RFI requirements. So to align the sending information to the receiving party is very important. So each country has a different API need to adjust that. I think that's the challenge I'm seeing right now. Liquidity is not a big issue. We are not a challenger for Circle or Repo. Actually, we are partner for them. Okay.
Thank you.
For them is that actually this payment 3.0 just is at a very early stage. We need to work together to make this happen. This technology-wise is not a big challenge. It's very simple. I think the problem is the mass adoption. We need to get people using these stablecoin rails to get the transaction flow, right? That's the thing we are working on. Yeah, I think probably within 1 or 2 months we can get this cross-border remittance live, so people can really enjoy the benefits of blockchain and crypto. Yeah.
Yeah, to chime in, I don't know if I have a catch line as catchy as Ripple Killer. I like that. We're going to have to noodle on that one a little bit more ourselves at Kaliza. But I think Rita touched on an interesting point about the involvement of like the Pay3 landscape, or Pay 3.0, sorry. It's interesting because before stablecoins, there hasn't really been much innovation in terms of how money moves cross borders. When you think about it, Western Union is one of the oldest institutions, since the 1800s that essentially went about setting out bank accounts all over the world. And the whole thought process behind Western Union was, how do we make it as easy as possible for folks to send money cross-border instantly? And I say instantly with the quotation marks because at the end of the day, what they were doing was fronting the liquidity and essentially charging for that. And many other institutions have since replicated this model, whether it's banks, other remittance platforms, or even commercial cross-border payment platforms. And so since then, I look at my colleague in the crowd, many other startups to be more competitive and offer instant payments have even gone out and said, we'll go out and raise some credit and use this credit to effectively facilitate a deposit in another market where we know we're going to be sending funds. And then I think the next leap was Wise, which essentially realized that, all right, we can actually net flows in and out of a market, but there still hasn't been anything until stablecoins that said, actually, we can move money in real time into other corridors without having to be constrained to effectively local bank account deposits. And so similar to what Michael Gao was saying, we don't necessarily face like liquidity constraints that we always work with bank partners in our core markets of Brazil, Mexico, U.S., to whether it's the FX, the PIX and SPAY payments, local bank transfers, before we on-ramp, or off-ramp into stablecoin. And I think that's been kind of the core part of our thesis, and how do we make sure that we're not only offering like compliant payments for our users, which are businesses, so they don't have tax and regulatory repercussions, but at the same time ensuring that there are no liquidity constraints, right, in using stablecoins in the Kaliza stack.
Just want to echo our fellow panelists, right? I think when it comes to PayFi, right? PayFi is a concept is getting popular for the past 12 months, right? But actually, when it comes to payment, it's been around for as long as we can remember, centuries, right? Normally payment in the legacy banking falls under transactional banking, and it's extremely difficult, manual processed business, right? So it's not really, as close to everyone, right? And then at the end of the day, you think about a global total M2, that's 8 trillion, right? So there's a lot of money, right? There's a lot of zeros there, right? That's the total supply of money in the world, right? And then the largest company that doing payment take up how much of the market shares? Less than 1%. What does that mean, right? That means actually the direction is very clear. And then the size of the market deserves not only one winner, like Ripple or many other people, right? Multiple different winners, right? And we were talking about the Web3 approach. But actually, there's our counterparties in the traditional banks, in the traditional fintech company. So I think this is really not just to say, it's like, I use the synergy, right? In Hong Kong, there's a lot of cha san ting, right? Local restaurant. At the end of the day, everyone's gonna sell this bolo bao, right? It's a pineapple bread, right? He has his own pineapple bread. We all have our own pineapple bread. But it really comes down to how can you build a narrative so your end user will come into your house to eat your pineapple bread, right? So this is a very easy synergy. But sometimes maybe I don't have a bolo bao, I have a curry puff, right? But when guys come over here to say, hey, I want an pineapple bread, I will say, hey, our partners, right, on this panel. So it's really a collective approach to resolve a long-term problems. At the end of the day, right, either Clicko, RadoPay, RD, Kaliza, right? Thank you for the name mentioning, right? We all want to come up an alternative solution that actually make commercial sense for end users. That's what I think, what it matters.
Yeah, I think, I guess just to echo everyone, I think, what everyone is saying is it's still early. We're very, very early. And, it's a winding road towards the future. But, like as we speak, right, like I always quote this number, Hong Kong's B2B payment flow last year was more than 1.2 trillion US dollar. That's flow, right? And that flow is actively moving into stablecoin, whether you want it or not, because of many, many reasons driving it behind, right? Like emerging markets adoption of stablecoin because of their needs to access dollar, right? And they need it for cross-border settlement for global trade. Many, many reasons, right? Regulatory clarity around the world. So to echo Michael's point of view, which is, like there are various use cases that's driving adoption of stablecoin in various places. Like I also, like each use case has its own set of customers, right? And I always say in Hong Kong, for example, in Asia, I don't think there is a very strong, as of now, there's a very strong use case for retail adoption for stablecoin, like in the day-to-day sort of purchase of coffee, that kind of use case. Why? Because fintech, where the payment 2.0 has already been so successful and so convenient, right? Like I have so many ways to pay for my coffee in Hong Kong. I don't need a stablecoin. What problem does this solve for me, right? So I think in my previous panel, I also talked about this. The pain points you solve the most for your customers will be the first use case to be adopted, right? So why today stablecoins are most used for cross-border payment towards uncertain corridors, because it solves really, very strong pain points, right? For consumers or businesses in those regions. So I think, just going to the pineapple bread example, right? Like each use case has its own set of customers, and all of them are driving adoption of stablecoin, and we're early, and like all of this is contributing to the growth.
Yeah, so that segues very, very well into the next question, which is really use cases, right? I think everyone at this point, we've talked a lot about how with blockchain we can move money faster, we can move money cheaper. You know, for the benefit of the crowd, I think what would be nice would be to understand what use cases you guys see on the ground, or maybe help everyone internalize with a story in terms of where you guys are operating and what's the most exciting thing that you guys see where a user or a client has come to you directly because of your product that's solving something that they have problems with. I mean, maybe we can start with Michael, especially because I think it's interesting for your side because you're one of the strongest components here, which is in the B2C space, right, in the retail space. And I think that's something that's been extremely hard to do. So congratulations on the growth, and we'd love to hear why your payment platform has grown so quickly in the retail space, and maybe the stories that you see on the ground as well.
Okay, thanks for that. Yes, we are only dealing with the retail users. So fortunately, we got a user traction globally, especially in those undeveloped countries in Africa, Middle East, South Asia, and LATAM. So the product we launched to the end user is a crypto credit card. So it's the same as a traditional credit card, but the user can use a crypto instead of fiat currency. So that's what I mentioned at the beginning, is that we want to make a crypto usable like a fiat currency. And right now, this is the product is well received in those undeveloped countries. So it's mainly for them to have how to say is US dollar payment instrument to do the online payment and the offline payment. And another use case is for them to preserve the value, especially when its local currency has a huge inflation. Okay, that's probably the two reasons why this product was so popular in those countries. And we are going to continue to roll out to other countries. Right now, we issued a card from Hong Kong. We also issued a card from Singapore. And other than the card itself, then we want to move on to do the remittance, the cross-border remittance. So that's going to be live within this month or next month. So that's another use case. That means how to use the crypto for remittance. So for us, it's mainly looking at what the end users want. But yeah, for the second one, I think that's solve the real problem of payment 2.0. When you do the cross-border repayment, then you need to build a liquidity in different countries, and it's very costly, right? And by doing payment 3.0, then we are able to lower the transaction fee and make it faster. That's what we want to achieve, to bring the value to the end users. Yeah. But to do that, we need to work with different partners like RD, like other PSP, also called Repo. Yeah.
Great. And I see, Ezra, you're nodding a lot. I assume you're seeing that kind of theme in LATAM as well.
A similar theme, but also I think it's a pretty salient point. You were talking about Michael. I think so I live in Sao Paulo, even though I was born and raised in the U.S. and in Washington, D.C. And the price I pay on a monthly basis, like relative to the dollar, has fluctuated about like 25% in the last like 4 months in Sao Paulo for like my monthly rent. And I just found it fascinating that I'm constantly looking at the exchange rate, which has been volatile to say the least. And this is, I think as the previous panel was referencing, we're in interesting times, whether it's discussion of tariffs or whatever it might be. There's rippling effects across the ecosystem, particularly across LATAM. You'll see that in a lot of the exchange rates. In our markets like Mexican pesos, Brazilian real. And it's to the extent that, even though we're business focused, I would say that this is a very real problem that many businesses face, where their treasuries might be traditionally held in pesos or real, and they may actually end up having to hedge against that, right, and custody or keep it in dollars. And, I'll point to actually a very real problem we ran into before we started our business. The first time we capitalized our Brazilian entity from the U.S., it took 3 weeks and $2,000 in legal fees to make that happen. It was very eye-opening for me, and like how costly it was and how much time it took. Every market's very different. In Brazil, for example, every type of payment in and out of the market needs to be registered with the central bank. Everyone has a different central bank categorization. And it was a good learning curve, right? And so for us to systemize that for other businesses, they're doing the same, whether it's helping influencers that might be taking payments right from the U.S. or sending payments out to Asia for suppliers. A motorcycle, actually, very real example is a motorcycle manufacturer in Mexico, where they will be facing 4 days of delays to essentially receive the chassis in Jalisco before payments received by the supplier in Hong Kong. One issue they're running into is how do we help expedite our supply chain and make this process as fast as possible so that we're able to produce more motorcycles, beat their numbers of what might have been, I think it was 1 million last year, and helping their growth efforts. And a lot of that's tied to like settlement times and cross-border payments. So it's a mix of, I think stablecoins are really having their moment, to say the least. I feel like most of us were exposed to stablecoins because they offered a way to capture your earnings after like maybe some speculative trading, but now there's very real payment and really saving and treasury management use cases that I think is very exciting.
Maybe I can share another example where, for the past 5 years, I've been living in Dubai and Abu Dhabi, right? Move over there after COVID, right? Not by choice. I was there for a fintech conference, and all of a sudden I feel like, wow, there's a lot of Habibis, and then it's not bad to build a real business there, right? But two of the learning pieces, right? One is the educational process, right? When it comes to a regulated business, right, where we are all operating regulated business in an efficient market like Singapore, Hong Kong, US, Europe, right, where the regulators, the understanding is there, right, and the market is there, it's very close. But areas like Middle East, Africa, is a very cash-rich society where they are terrified about AML, money laundering, right? Talking from a former regulator, I used to be a regulator, so I exactly understand how the regulator will react to financial innovation, right? So that's there's a very pronounced argument when it comes to that part, but it's also a real use case. For example, right, UAE, there's a lot of expat. And then I use an example, a largest indoor golf club, right, where they have 40 people as a team, but it came from 33 countries, right? There is a local South African golfer. Every month he got paid in dirham, and he has to send money back to South Africa, right? The South African onshore capital control, end-to-end cost is 8%. And you have to wait for multiple days. I still remember the day when I go into that place, I explain everyone what is crypto, what is stablecoin. No one understand. But I said, if you pay attention for the next 20 minutes, I'm gonna save 50% of your transaction cost. Everyone put their hands up. And I spent the entire afternoon helping them to download, centralize the wallet, tell them how to top up, how to make the first transfer, right? I'm not trying to be cheesy, but I can see they're literally crying when they transfer the stable coin, where instantly the people actually on the other part of the planet actually got it, right? This is where I think is actually a real use case. Another use case.
Hajj.
Yes. Another use case is there is a country, I don't know if you guys come across, it's called Ethiopia, right?
Yeah,
it's
my family's from there.
Oh, yeah. 150 million population, right? There's a lot of our friends there, right? It's probably 20 times the population in Hong Kong, right? And there's the one region called Somalia region, right? Where all the Paris used to be. But now, right, they got smarter. Everyone became a money changer. But you have to travel 45 minutes for you to find a real cash counter, right? So I think those are the right region to actually build disruptive technology and really apply to daily use. Yeah, just my 3 cents.
Wow, very, 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 very good examples, Michael. And I was going to talk about. I mentioned that I know that in Middle East there's this Hajj, where the pilgrim from Muslims around the world to Medina, right? And then they always have this problem, which is all these people from mostly emerging markets. When they go to Saudi for Hajj, it's just painful for them to pay there, right? So they have always been trying to come up. I know the government has always been trying to come up with a solution to make it easier for all these people from all over the world, all the Muslims come all over the world to pay easier when they come to Saudi, right? So I think that's just another example. And I think so when it comes to RD, the use case we are focused on is B2B cross-border payment, especially related to global trade. Why? Because I think there are many reasons why we're already seeing lots of adoption of stablecoins from importers and suppliers in all these emerging markets to use stablecoin to settle. Because one is the biggest export center, right, which is China. More and more it's exporting to emerging markets, and the emerging markets, I guess we already have enough examples here. The emerging markets are left behind by traditional financial system, right? That's why the new things are adopted more in those countries, because they were left behind by the traditional rails, traditional systems. And Michael was talking about actually financial innovation, right? So actually in the past decades, we have seen lots of financial innovation for domestic market. Like for example, Asia, various countries and some European countries, there have been lots of financial innovation for domestic market, right? Like I said, we can pay very easily in Hong Kong. When I go to China, I can pay very easily using all kinds of tools to pay domestically. But cross-border, it has been just painful and not much progress for many, many years. Why? Because it's a heavy lifting. It's heavy lifting, all the global payment system, SWIFT, Visa, MasterCard, it has been around for decades, right? So Visa was has been around for I think almost a century. So to have those global consensus or network to settle using tokenized money is going to take some time. Again, going back to my point, it's early. But all of these use cases, especially in the emerging markets, which are left behind by traditional rails, will be the first ones to adopt it. So I think, Hong Kong, coming back to Hong Kong is very important for that, because Hong Kong connects this biggest export center with the rest of the world, right? And so with stablecoin innovation, Hong Kong will be becoming even more important, because this is where the stablecoin will land and convert with fiat, right? So, our focus would be like a B2B cross-border payment.
Just want to add on one thing, right? I guess I think many years ago, I actually asked a question for the former CEO of MasterCard. I said, my friend, who's your competitor? I was expecting him to say Visa, or well, back then UnionPay is too small for them to give a shit, right? I shouldn't say this. But to my surprise, they say no, right? In fact, the large banks, the card schemes, none of them are our competitor. Our real, genuine competitors is cash, right? So actually, it really put, me into perspective, right? You see, none of us are really competitors, right? They're building amazing card programs for real use case. They're focusing on our regional lab team as a special region, right? We're working together with all of the to be the Ripple killer and work with Ripple together to fight cash, right? And then I was actually just came from Shanghai. And to my surprise, I think the real adoption is happening, right? Because I was walking on the street and see a beggar there, right? And then I don't have WeChat Pay, I don't have cash. The guy looked at me. It feels like I've got a Web3 vibe. He said, "I have a crypto wallet. If you want to." Yeah. So I think the retail adoption is slowly coming in, as long as we really have a aligned, collective, shared dream with the support. And actually, it is. I don't know how many of you guys are actually in crypto. Sorry, in payment, right? If you haven't got into crypto or payment, don't come in, because it's extremely difficult. And then, I start losing hairs when I go into the PayFi thing. But we've done the heavy lifting so that you guys don't have to worry about that part.
Case in point. No, that being said, it's very interesting to hear about the advent of like cross-border payments and how difficult it is. I think many of us probably entered the space because it was born out of frustration with some sort of pain point that we experienced. Myself, my first paycheck in the U.S., I remember being lost in the mail, not being paid for 3 months when I was in college. I was in New York at Columbia University for engineering, and just remember trying to get by. And it's just a crazy concept that, we were relegated to paper checks, have since evolved to direct deposits. But I think, Rita, you touched on a really good point that a lot of emerging markets have not had to go through this passage of, I think what I saw in the U.S. with like checks and whatnot, whether it's the jump to M-Pesa in Kenya or the jump to Alipay and WeChat, in this part of the world. And so to that end, there's still this gap of like and I think we're getting to this theme, every country is moving this direction, whether it's led by a central bank or a monetary authority, in adopting real-time payments domestically, and there's still nothing really to stitch that together apart from stablecoins, which I think brings us all together here.
Yeah, go ahead. Yeah, so I think those are great points, and I think something to highlight here on the panel is that most of you had built payment companies on background or worked with payment companies in the past. So we have someone from Alipay, we have Ezra from Visa. Michael here also worked directly with at DBS, if I remember correctly. I mean, I'd love to hear, Ezra, just now you mentioned it's right timing and the advent for stablecoins is coming out now. I'd love to hear more in terms of why you guys think that PayFi is happening today versus what it was 3 years ago, right? Because, the technology has always been there. So I'd love to hear what you guys think are sort of the biggest catalysts going forwards.
Okay. So I will admit that I'm a bit late to the crypto party. So I remember in 2013, I was working at a startup. Well, first job was me and 4 other folks. We built a peer-to-peer wallet in 2013. I did the whole quintessential Silicon Valley story, slept on the floor with a sleeping bag. We were very fortunate. Eventually, we sold it off to Square, and fast forward, went to the dark side, went to Visa, where Visa said the same thing as MasterCard, that their biggest competitor was cash. And my learning on my first week on the job, we were hosting 12 people coming to the office, and I remember my manager at the time was like, Ezra, I'm going to give you the tall task of booking a conference room, which I laughed at. I was like, all right, sure. Lo and behold, it was for the Federal Reserve Bank of San Francisco, for MasterCard Send, our direct competitor when I was working at Visa Direct, and the Clearinghouse Network. And the Clearinghouse Network, for context, they're one of the 2 ACH operators in the U.S. They're also owned by banks like BNY Mellon, JP Morgan. And the crux of this meeting, this was 2017, and at that time, maybe a dozen countries had real-time payments. Today, there are over 80 countries that have real-time payments. And in my opinion, that's probably the boon or one of the single most important factors for why we're in this phase of why stablecoins are so important. Because I think stablecoins become increasingly more valuable when every country has the opportunity to say, we have a bank transfer system that is immediate and fast. That was not the case 10 years ago, 3 years ago, right? Or 3 years ago, maybe about half as many, about 50. And so I think that last mile is incredibly important, but at the same time, there's a lot more regulatory clarity, which is a significant factor, I'd say.
Yeah, I think, sorry to jump in. So I think it's the same for any technological revolution. It has always been that way. So it keeps brewing, there's lots of brewing until that Windows moment, iPhone moment, whatever moment, right? So I think has been lots of brewing in terms of customer awareness, the industry awareness, perception, regulatory clarity, and the maturing of the whole ecosystem. So I guess this year we always say this year 2025 is the inflection point of stablecoin mass adoption. Actually, maybe last year was already the inflection point because I think regulatory clarity is becoming really strong over the world. There are more than 25 countries with a stablecoin regulation framework or law just being in work as we speak, right? So I think there are various things that's been brewing, but like it has always been like that for any technological revolution. So that's why it's now, right? But when it comes to incumbents, right? Because you mentioned we all worked or founded like payment companies before, some being very big. I think with any technological revolution, right, or evolution, incumbents would be slow to adapt. Why? Because they have all this traditional business to care about, right? So that's why with any new evolution, the new entrants become the main driver, right? Because the incumbents have too many baggage to handle. So that's why I think but one definitely important factor is also the convergence of traditional players with the new players. That's also one factor that's driving all this adoption, which is they are coming together as well, right? Like we are at RD, we're seeing really, really traditional names coming into the space, both from payment space or FI space or merchant space, coming to the space to use a stablecoin for cross-border payments. So I think there's also a convergence that's also driving the adoption.
If I might add in a little bit, right? I think the biggest difference 3 years ago versus now is actually the major macro change, right? 3 years ago, what was the guy's name for SEC?
Gary Gensler.
Yeah, Gary Gensler was still the chairman, right? And 6 months ago, right? Donald Trump was now president. Now, just think about, right? Like in short of less than 6 months, right? Well, they actually initiated try to make U.S. stronger again by leveraging the blockchain technology, right? They're not going to build a major crypto exchange for everyone just to pounce, right? They're really strategically, from a state level, try to think about how they can protect their own interest, right? I mean, dollar is their interest, right? If people are moving to an alternative payment system, well, I want to make sure I get in there early, right? That's why they launched all those initiatives. And then starting from that, every single country, their decision makers, their policy makers are thinking about that, right? I don't know how many of you guys actually keep up with that, right? You see, I think yesterday PBOC announced that their M-Bridge initiatives right now is actually connect to all the ASEAN country and also Middle East country, right? Which potentially can settle in RMB, right? That's actually a major progress. I think 3 weeks ago, we were actually in Malaysia, right? We had an official meeting with the Prime Minister of Malaysia, where throughout the entire meeting, he was saying that, hey, you know what? We want to learn how other regions, like Hong Kong, like Singapore, like UAE, are you're learning lessons, right? When it comes to leveraging this technology in payment, right? Because payment as a use case is not like fancy, but what it comes down to, what currency, what asset do you hold on to that to do your payment? So I think there's generally a structure change globally that might not really impact every one of us, right? But actually can allow a state to really jump up on the global ladder, right? Just because they actually push for that. I can see UAE has actually kind of leading the way for the past 3 to 4 years, where everyone and their dog are trying to go over there, set up something, right? And we're very happy to see the Hong Kong the energy is very strong. People are coming back. So I think those are the macro picture change that actually have a positive impact on the payment part.
Okay. Answer the question from Justin. What's the difference from now to 2 years ago? My view is that the PayFi is different from crypto exchange. Crypto exchange is they have many roles on their own, right? They are investment banks, they are broker dealer, they are the banks. PayFi actually, if you want your business scalable, you need to work with different partners. I think the challenge we right now is that how to run a business in a compliant way by your partners, because you cannot run a payment business alone. That's the major difference. So this technology has been there for more than 10 years, right? The crypto wallet has been there for many years, but the thing is that if you want to mass adoption, you cannot just play it within the crypto community. you need to bring value to the non-crypto people. So just I mentioned that the two benefits. One, preserve the value using stablecoin. Second benefit is that you have a US dollar payment instrument. So if you want to make a PayFi business successful, it's not to revolutionize the traditional payment business. It's actually how to run your payment business acceptable by the traditional payment business so that you can be part of the payment ecosystem. That's very important because this is unlike a crypto exchange, you just do it yourself. You really need to work with there's an ecosystem for this. So I think comparing to 3 years ago, I think more payment partners are acceptable to cryptos right now. And they have more understanding of the AML, like a KYT and a compliance related issue. So they are willing to try. I think that's a good thing, right? Yeah, that's what I see this. I think like the other panel, other people mentioned here, macro environment is different. People are more acceptive. They don't think this is a scam. And they realize that there's a value to use the crypto for payment. So that's what I see.
Yeah, I think just I think one thing Michael mentioned that it's not just like probably like one thing, right? Like everything needs to come together for this PayFi sort of ecosystem to work. Actually, we always talk about in the payment 3.0 ecosystem there are 4 layers, right? So you have the settlement layer, which is the blockchain, right? And then you have the asset layer, which is different stablecoins or different tokens. And then you have on-off-ramp layer, which is changing or conversion between fiat and stablecoin and other crypto. And then you have the interface, custom interface layer, which is the wallet, the different types of wallet, how you interact with all these services, right? If you look at the 4 layers in the past few years, it has always been, all of them have been maturing, right? There are more and more effective and fast and cheaper blockchain as a settlement layer. And you have more and more assets, which is more and more stablecoins issued by compliant stablecoin issuers. And then you have more and more compliant on-off-ramp players. And then you have more and more wallets that are more customer friendly, right? So all of that layers need to come together for this mass adoption to happen. And so I think that, going back to my point that it has been brewing for years, and now I think we're at that inflection point.
Yeah, and I think something highlighted here versus 3 years ago is I think this time around it sounds like everyone's having quite a collaborative spirit, right? Whether everyone here is working with each other, whether, Ezra or Michael, you mentioned things with working with regulators. It seems like it's an open conversation and people want to move forward, whether because it's for local currency sovereignty or whether it's because the fact that it is touching things like M1 and M2, right? So I think this is very interesting versus what we see 3 years ago, which tends to be more like, how do we pump Bitcoin, right? How do we pump meme coin? So that's something very exciting. We only have a couple minutes left. Since we went back in time, maybe we can go forward in time. Just a quick round of predictions in terms of what you guys see in the PayFi space, maybe in the next, let's say, 10 years, starting with Michael.
Well, this is a very big topic. I think a few things I see. I think stablecoin will be more adopted in the undeveloped countries as a substitute of its local currency. So that's number one. Number two, I think for cross-border remittance, more and more people are going to use a stablecoin. I think probably 5 to 10 years later, we can see more people are doing the payment on chain instead of through SWIFT. That's what I see, yeah.
Yeah, so my prediction, I will always mention this one. So I think in 5 years' time, the stablecoin market cap will grow to $3 trillion US, and that's like also compared to the global M2, still small, right? So I think that's that for global used for different use cases. Now for Hong Kong, the 1.2 trillion B2B payment flow, I'm hoping in 3 to 5 years. Half of that will be done by stablecoin. So I think that's definitely going to happen.
I think 10 years too long, right? Probably not even 3 years. Next convention, PayFi is not going to be a topic. Because PayFi is getting like a commodity, right? Next convention is going to be Standard Chartered Bank, JP Morgan sitting there talk about PayFi. We're on average 60 years old, right? So I think what is the biggest risk? The biggest risk is not to take risk. And we are taking the risk today. But this is not just normal risk, it's risk-adjusted risk, right? Compared to payment, right? It's definitely low risk, high return versus perpetual trading, right? This is what we're doing. So I think last but not least, just shout out to the Clico team over there at the corner, right? Without you guys, couldn't be sitting here. But this is only the start. At the end of the day, we are the Ripple killer, but we're not a payment company. I think a much bigger vision, just to not to position ourselves, all of us as a payment company, right? We're actually building a unified financial platform that actually gives easy, effortless access to individual, corporate, and business. A destination agnostic approach, right? Where from there, we can power all your experience, either legacy banking or Web3. And that's the ultimate dream.
Last historical anecdote from me. I think part of the reason why we're talking about stablecoins and not SWIFT is because SWIFT came about in the 70s in Belgium out of a conference with a few European banks. Here, everyone's on stage talking about everything but Europe. We're talking about Asia, we're talking about LATAM, we're talking about Africa. I think when we talk about stablecoins today, we're talking about stablecoins that are backed by assets in the US or Singapore or various markets. I truly think the future of the future stablecoin that we all will adopt and interact with is one where the assets are sitting across various banks internationally. It requires a little bit more effort and work, right, across these various banks, across different regulatory environments, but that's what truly allows frictionless commerce going forward. And so, like everyone else, just echoing that, I think this will be the predominant form of cross-border payments.
Very good.
Great. Thank you so much to our distinguished guests, and thank you everyone for listening. Let's give a round of applause for these guys.
Thank you so much. A big thank you to our fantastic panelists for such an engaging sessions. Let's capture the moment with a quick group photo, please. Yes, to capture these memorable moments. Get closer, please. 谢谢各位嘉宾的分享，你们的政治拙见让我们见识匪浅。谢谢各位。Ladies and gentlemen, that will be all for this forum of PayFi. Thank all the speakers again for your excellent speeches and the audience for your participation and patience. 各位观众，2025香港 Web3 嘉年华主题论坛到此结束，我们共同见证了 PayFi 的创新力量。再次谢谢各位嘉宾的精彩分享和各位观众的耐心聆听。我们期待下次再见。Have a good evening. Goodbye.